Good morning. How's everyone doing? Pre-market pickle. Horrible. You'll get over it. Can you explain how you look at options flow and can determine what is bought or sold? But do it like you're part of a high school theater group trying to do Hamilton. It's too early for that shit, popcorn trader. Nice try. Tesla Baggy's gonna buy the dip. Yeah, probably. XRT's back on Reg Show. Ooh, really? Well, that's interesting. Hmm. Are you cutting Tesla puts at open and repositioning, do you think? Probably not my like November, December puts, but um I'm going to close the puts that expire tomorrow. Ding. I think we've got a little bit of room to the upside here. Maybe. Well, we're almost at the call wall. Maybe if we could break the call wall, we could move up higher. It's gonna be like sorry. Oh no. Well, there goes my okay. It's back. Um if if we move above the call wall here, we could probably hit like 43.30, maybe 40. If we don't break 34.40, puts are still kind of in control. Hitting puberty, yeah, you know how it is. PT for terrible Tesla earnings. Did you hear the call? Yeah. Elon was so bearish and sounded zonked, not professional, tons of tangents, cringe, made me sleepy at the same time. Very weird. Sounds pretty normal for Elon. You okay, man? I'm doing all right. How do the most recent GME DRS numbers look for locking the float by 2065? Pretty sure the rate of accumulation is negative. They selling CCs on T? I don't know, maybe. Not yet. Can you learn ASL in case that happens again? I'll hire the woman who used to do Biden's speeches. XRT, what mean? It's back on Reg Show. I'm not really sure what that's going to mean for GME. Maybe they short the fuck out of it for the next 2 days. It's a bit early to put it on Reg Show in order to offset OPEC's obligations. And it just came off Reg Show, which obviously isn't good. Whoa. Why are the AM expiring 0 DTEs pricier than the regular ones? It feels counterintuitive. I don't know. The spreads are probably just wide. The Cybertrucks are the actual worst thing I've ever seen in person. A bunch of engineers had a happy hour with us last week and drove a few over. Woof. Yeah, they're fucking super ugly. I can't believe anybody would spend any amount of money on owning one. It's like a shitty DeLorean. Yeah, people are selling their DRS shares. That's just FUD. What would you do if they gave you one? Burn it. Legally, of course. Donate it to like a fire department or something. And they could practice putting out lithium fires. Maybe it'll save a life. If I get Ponto for going to the Tesla dealership to buy matching Cybertrucks, you're paying for them. Whoa. Don't disrespect DeLoreans like that. Those fuckers can time travel. I know, Carl. Is Jimmy dead? Yeah, haven't been here in a while. Doesn't look great, does it? Oh, ew, I just Googled Cybertruck. That's awful. I'm not scared of scratching it. It's made out of like stainless steel. It's gonna look so fucking ugly with scratches on it. Hey Greg, would you mind removing all the indicators on the SPX chart so you can see it better? Yeah, sure. Ooh. Failure. That's exciting. There goes VIX again. Hmm. Interesting. All right. I made 18% on the call side of my QQQ straddle. Now let's get some downs. Nice, dude. This ain't no bear trap. This is the beginning of a real market crash. It very well could be. Gapped, crapped, and VWAP'd. Nice. Was that the bull attempt? It might have been. Yeah, under 43.25 is kind of a problem, right? Oof. Yeah. A lot of put interest at 43.20. Even more at 4,300. This doesn't look great, you know. We've got yields starting to push up again. 30 years already above 5% today. The only thing kind of working in their favor is the euro's up a bunch, and that's pressuring the dollar down. But and that's just going to be a little less pressure on volatility. Jesus, puts are expensive. Welcome to the new normal. Newbie trader, there are no ups. Bears always win. Bulls always lose. That's nonsense. Where do you see GME going? Sub 13? It's kind of a historical support right here from Feb 2021. But yeah, if there's no reversal here, it could get uglier. Hmm. What the fuck is that? I think gamma neutrals at like Yeah, gamma neutral's at $12.43, but it's probably not going to go below 13.24. What a piece of shit. Fucking AM expiry bullshit. Good morning, Tori. Oh, I don't know why the fucking euro's doing well. Current account surplus is quite high. 30.7 billion versus the forecasted 23.0. That's probably about it. We've got existing home sales coming up in about 17 minutes. NQ is testing 1500. It's trying to outperform the SPX a little bit today. Oil's down. Russell's down. Dow's up a little. If we lose 43.15 again, that's going to pump up vol. Similar to yesterday. We're going to get the fast cool downside thing again? Well, I mean, we could, yeah. Greg, I'm unhedged and my huckleberries are primed for consumption. Good for you, man. I sold my house? Fucking A, Jason. You've been trying to do that for years. I did the same with my QQQ straddle. Thank you so much, Greg, for mentioning QQQ the other day. I couldn't afford SPX options close to the money, so I was just burning so much. No problem, man. Nice. You mean Jason found the greater fool? Yes, he did. Hey, Girk, I just bought another house. Sounds dumb. With my credit card. Is JPO gonna talk to us about fish concerts or what? Maybe. You think he's a big fish fan? I like fish the food. Yeah, it's okay. We got about 14 minutes till existing home sales. JPOW's at noon. I mean, based on positioning right now, I could see us moving lower before the speech. Yields are still going up. Let's see what ES looks like right now. ES kind of chopping on 43.40. Getting a little bit of a trend here. Boop. Let's say if we break down through that, we'll probably slip lower. Right now, lower means like SPX 4300. It's gonna be like 4327-ish. Which we tapped a couple times in the overnight session. I have no idea what he's talking about. This gave you an interesting relative strength entry here with J&J getting pressured down. KV is pretty cheap. It's also got a massive short position on it though, so that could last some time. With current positioning, do you still see us closing higher tomorrow? The end of the week. I never projected for us to close higher. Into the end of the week. That was Dork, I think. Dork was the one who was pointing to us closing higher. I still have the lines. Yeah, this was Dork. This is me. Mine was like Wednesday, midday, down from there. I think Jimmy might be dead. All right. Is Jimmy getting actively shorted? Man, this is painful to watch day after day. Yes, it is. Our buyer came in 15K over asking, but asked for a credit to buy down his rate. Borrowed against himself so he could pay more property taxes. What a genius. Why can't we have a timeline where JFresh's flippant prediction comes true? I don't know. Maybe next week. The average cost on 28K shares of Jamie is $16. It's not bad, right? No, that's not bad. Also, 6 kids under 12. That's a lot of children. Is JFresh a large language model? Yeah, at this point. Hey, Greg, I'm the guy who strangled on Tesla with 240, 260, 3-to-1 put bias. I made 10K. Thank you for what you do. I'm logging off to protect gains. Okay. Jimmy's like a toxic ex I can't get away from. I keep getting assigned my shares and buying back way lower. I'm feeling tempted to slip again. Someone stop me. You might need counseling. The Big Dispersion, starring Gork, Dork, and the Juice Caboose by Adam McKay. Why large language models? We crank soft goods better. If you strangle something at 3-1 puts a call, why not just strangle at 1-0 or even 2-0? What am I missing? Well, you're partially hedged on a move to the upside. And if the move to the upside is greater than expected, it could pay for the entirety of your position or even profit. I was hedged like 5-1 on Nvidia's like second earnings this year, and it paid for all of my puts that I'd ever bought on Nvidia. So I think you might be missing the opposing exposure and the value that could be found there. I've been trying to get my soft goods cranked for years. I know, Carl. Maybe your second marriage. The legendary .2 Delta hedge that saved JFresh's port. Fubo holding above 250. Bullish for OPEX? Uh, might be. How's Russell doing? Russell still looks like shit. Uh, Fubo's pretty illiquid still. Yeah, could be. I feel like the Netflix earnings should have been better for them. Hmm. Well, not a lot of volume or pressure on it yet so far today. I guess it's outperforming its index, which is all you could ask for. All right, Mr. Grack. When we dip into 4K. 4K? Not this week. How low can Tesla go? Like 100? At some point it'll bounce and it'll stop out my puts that expire tomorrow. I don't know when. What a sack of shit. Remember when I posted that like long dated Tesla put play? And everyone was like, oh my god, Gherk, Tesla moved up $3. What should I do? I'm gonna close everything. Of course we don't. It's true. Yeah. No pecs, right? Jimmy's dead if it's below 1350. Why? Oh, the tips don't look that great right now. XRT's back on reg show, so they're gonna burn all of that up. And they borrowed like 2 million shares since the end of the day yesterday. I full ported Tesla 100Ps for tomorrow. You're gonna get wrecked. The pickle jar can only plan out positions 3 days in advance. TradingView doesn't have options contracts unless you import them. Is SVX just gonna chill here? Well, we got data in 1 minute, so existing home sales. GB down 50% since June. No big deal. Yeah, and the money cover calls were pretty cool on that drop. The JPY 10-year is rapidly approaching that 1% cap. Yeah, but they have bond buying in place to manage that. Home sales pumping the market. They're down from last month, but not as much as analysts expected. Ooh, the leading economic index looks like shit. Nice. Could we chat GME CSPs? Since I wouldn't mind getting assigned under 13 with a decent amount of unused leverage, can you entertain / educate me? They're probably not worth it. I don't think puts are super blown out. If you went out like 30 days, yeah, they suck. It's like a 4.6, was it 4.6% yield? Gross. I remember when GME weekly CSPs would yield like 8 to 12%. I just bought 100,000 GME shares for 13.52 each. So you're underwater. Good point. It's a worse return than 30-day CDs. No, it's better. It's way better. That's not annualized. How is this not failed on the shitty data? Was that the whole RAD thing? It was giving good weekly returns. I sold CSPs on RAD. I closed them before it got delisted, but they went up. It was okay. Thoughts on Fubo after Netflix earnings? Running how far by end of week? This week? Probably not very far. Maybe next week. The SPX red candle was immediately stuffed. Although upside momentum's starting to break down now. So we might see this begin to turn around. That looks kind of shitty. Yeah. Downside continuation, maybe. Have you lowered your PT for Tesla? End of year. I didn't realize I had an end of year Tesla PT. October? It could get pretty low. I would not be surprised if it could drop as low as like 150. Or maybe in a really adverse scenario back under 100. You can't live your life on the 1 minute. Give it time. It's trying so hard to fail. I didn't pay attention to Rat at all. Any new short plays for weeklies? Um, let's see. Did I do anything fun today? I sold. No, we're not going to talk about that. Hmm. Ooh, I sold Rivian 1850 uh bear call spreads. Sold some QQQ spreads. Sold some Netflix spreads for next week. Remember when Barry said Tesla dumps, the market's gonna go with it? Well, I'm not particularly fond of the man. I have to agree with the thought pattern. I love Burry. If you can sift through all the crazy, he's almost always right about something. I apologize. I'm sure you've been asked this 100 times. I haven't been able to watch much over the past few weeks. What are your thoughts on GME? Do you think it'll bounce eventually? Yeah, I do. I think it's pretty over short right now. Although I don't like XRT going back on Reg Show. That's odd. Today they start at the same points, and I'm confused. Well, yeah, at a pretty high degree of confidence that that's where we were gonna open. It wasn't too far off. Where did we open? Hold on. 43.21. Yeah, so we opened a little bit higher. Oh, okay. I think I see how you're. Hold on one second. So, Simo, I think I kind of understand how you're looking at it. Like this open leads to this outcome, but that's not what they are. They're simply the ranges, and then like the orange line is adding confidence to one or the other, right? So think of the orange line as weighting the outcomes. And that's obviously going to be based on the previous night's, previous night's options. So you're going to have to, figure out as options change into the morning session what that means. The orange is your prediction, more or less. No, it's like the higher probability range. So, what are your two fuchsia horizontal lines? Oh, I don't know. Just shit I moved down. I've never gotten an inner server error trying to place an order on WeBull before. Yields are still moving up, and vol control is coming in, so that's probably not going to work out for long. That seems stupid. Can I get rejected? Let's see. We done with this momentum yet? It's boring. Positioning. A little breakdown on out of the money calls that had positioned in the early part of today. And the money puts at 43.30, 35, and 40 are still there. Still a call wall at 43.25. That might be to stabilize a bounce in case J-Pow says something bullish. Or, well, dovish, I guess. Hi, Darth. There's one fund manager on Twitter who runs a vol fund, still claiming there's no reason for VIX to be above 20. Tell me you're over short vol. I don't think anybody who runs a real volatility fund would ever be caught dead complaining about VIX on Twitter. Can you discuss GME end of day like you used to do, going in on potential movements? I did yesterday. GME to zero. I usually cover GME most nights if someone reminds me. Bearish Hand of God just hit ES. Yeah, bull trap on the 5. Still holding up on that trend though, which is lame. Oh, we just broke back through it again. Well, that's cool. Maybe vol will pick up. Might be some de-risking. Trying to clear out Vega risk at 15 or 43. Like the upside momentum here, like that they have, is slipping. So hopefully we get like a leg down soon. I don't know how long it'll be, but like a real one, not this $5 bullshit. Gurk every day. Jimmy looks like a piece of shit. I mean, I don't know what else to say. Cohen fucked it. Stupid, stupid bastard. He doesn't care though, because he has like a fucking $3 cost basis. I will say, if you go back and watch my streams, as soon as my cost basis went under 0, stopped giving a shit. Just didn't fucking care anymore. Every $10 move starts with a $5 move. Fuck off, Daniel Supreme. Carl's new job has something to do with the cranking of soft goods, I believe. Yes. Yeah. With salt water. It's higher vol and market makers repositioning. Hedging forward as the demand in the market shifts, right? He's the epitome of the meme. How do you make $1 million? Start with $1 billion. Was this an insult? PyFi is a GME financial YouTuber. Yeah, at this point. Did you close your Tesla call for tomorrow? Yeah. I still have my puts for tomorrow. But the hedge, yeah. It was fucking worthless at market open anyway, but I closed it. Holding your call side of the straddle until after JPO? Probably. Although, I don't really expect him to say anything super positive. No one would ever accuse me of that attempting to close. Never happened to Hambanan. She's in school full time. She pops in every once in a while, but yeah, she's back in school. Jen is that what we is that because we found Girk because is that we found Girk because of GME? Yeah. I printed too much money. My bad. I saw this like trend on that's like popular on TikTok um through Reddit because I don't have TikTok, but apparently there are these people that pretend to be NPCs, and so like people give them money and they do a thing, and it's like they do the same thing every time someone gives them money, like they're a video game character. And more importantly, people give them money, and I think that might be proof, like irrefutable proof, that we're hurtling towards financial collapse. Also, maybe one of you Zoomers who understands TikTok better than me, because I'm an old man now, can tell me, is TikTok just people seeing other people do things and then also doing that same thing? Like a game of monkey see, monkey do? No, that's a tic-tac, Fluffy. And I don't think we need to talk about Hazy's penis size on the YouTube. It's not good content. I saw one of those too, and it made me lose a large swath of confidence in humanity. Trick is, I had none to begin with. So I just saw it and I was like, oh, this is what people are doing now. TikTok promotes trendy, stupid stuff in the USA and promotes science and math info in China. What if science and math information are just trendy in China, Carl? And America's full of idiots. Nonsense. What if there is no conspiracy? Tic Tac is a UFO? Oh, God. Yeah, we did watch that, didn't we? Thanks, Spicy Otter. But Gurk, the ACT scores. Who has faith in humanity? Have they seen a public bathroom? 1 in 20 people can't use a toilet without creating a disgusting crisis. I think there's just 1 in 20 people who shit in public toilets by bending over at the waist. Like this. Arguably, these people have reached peak capitalism. They know that they don't have to clean this up. And they're managing their risk by not sitting on the toilet. Also, they're keeping people employed. If I was a sole proprietor of a business and I walked into my public facing restroom and there was shit all over the walls, I would hire someone. I would immediately hire an employee. I don't care what the cost is. That employee's job, getting the shit off those walls. I love supporting local artists, and that's a masterpiece. Thank you, Baby Well Nuke. I appreciate it. I bought BBBYQ because TikTok told me to. Has the PP show just canceled all episodes since people stopped having shares of the extinguished equity in their accounts? Now, you people really have to hit that like button. Are you not entertained? I once stood next to a guy in a bathroom at the Metropolitan Museum of Art, and there were 2 urinals, And he just pissed to the left on the floor. Now, it wasn't an accident. It wasn't curvature of his member. Nothing like that. He literally turned at like a 45-degree angle to the urinal and pissed on the floor. Zipped up, washed his hands, and left the bathroom. Like the urinal wasn't good enough for his urine. Really made me think about a lot of things. I never wash my hands in public restrooms. My penis is far cleaner than anything else in a New York City public bathroom. There's zero reason for me to wash my hands. That's like washing your hands with shit. I'll wash my hands in my own bathroom. The sink is clean. Do you touch the handles to get out? Nope. Fuck no. Oh, there's that leg down I was talking about. I didn't leave my apartment during the pandemic. Do you take your shoes off in your apartment? Yeah, of course. Who should be selected president for a new bull market to begin? I think I should step up, but I don't know, guys. I'm kind of lazy. I don't think that's a disqualifier. Boyle just got murdered. Interesting. Pretty sure I'm not Canadian. Although, how would I know? Really? Who nuked Fubo? The market. Looks like the market nuked Fubo. Pretty hard, actually. They should be separate chains, Dork. Hold on. I got you, friend. Mm. Oof. Here you go, Dork. This might help. Something like this, maybe? That's a big bearish drop. No, the AM isn't a weekly, it's a monthly. So the October 20 contracts AM is SPX. The October 20 contracts PM, or well, weekly is SPXW. Yep. So that should eliminate the yeah, that should eliminate it combining the contracts. So it's just gonna keep selling off because it looks like garbage, right? Yeah. Okay. So I'm not worried about this bounce, I don't think. A lot of call buying on option selling on that bounce. They're really trying to keep it off of 4,300 there. Although it doesn't seem like a very successful endeavor. At least not so far. They're still buying calls though. Oh, and puts. They're buying both. More puts than calls. Hot damn. That's new. Bears. Is it still Bulls versus Bulls, or is it finally Bulls versus Bears? It's actually, I think it's well, I mean, there's some Bears showing up to the party, buying 0 DTE puts and such. It seems like profit taking as soon as we hit 4,300. It was. There was also call buying into the profit taking. But now that's starting to turn around with an increased demand for even more puts. New member song. Happy 36th anniversary of the 87 crash. Thank you so much, Crunchy Pie. Did somebody become a member? Oh, shit. Welcome to Cornishon, dude. Thank you so much. Also, happy 36th anniversary of the 87 crash to you as well. When you end a sentence with bears, could you please say rar afterwards? Thanks. With the little clause. Gotta be in meetings most of the day. I just need to know what price for bear song and what price for shirt off. Shirt off at 4,000. Bear song at 4,200. What caused the 87 crash? Using technology people didn't understand, largely. Shirt off only if we hit 4,000 today. I don't know what a bear flag is, but this is a bear flag. Do you think uranium's coming down again? It could. Is this the squeeze? It's going up. It's not like a short-term thing. $4,200 today has to be worthy of a shirt off. Nope. I'm already non-pantsed. If we hit 4,000 today, you're gonna have multiple pontiffs. We can't crash until after OPEX. Everyone step off the 1987 gas for a second. You're not wrong, 1 second, guy. It's harder for shit like that to happen than it was back then, little orphan Danny. But that doesn't mean it's impossible. It's just much less likely. Well, that would probably get me sent to HR. Granted, I am HR, but still, yeah. Realistic downside target if we break and hold below 4,300, 4,275. So T's up nicely today. Yeah, I know. Do these big bumps off earnings typically lead to price improvement or shorting? I don't think they typically lead to anything. They could lead to either one. I think their earnings were okay. As long as they didn't cancel their dividend, I could care less. Couldn't care less. Yeah. Gherkin, I made a meatloaf last night. Any suggestions for turning this into some kind of delicious sandwich? I have cheddar cheese and fresh ciabatta. Yep. Chop it all up, fry it in a pan with butter. Cover it. Well, actually, so chop it up in a pan. In the middle of the pan, push the meat to the edges. Take mustard and ketchup or tomato paste. And then fry that in butter. Push the meat back into the middle and coat everything evenly. Then top that with cheddar cheese. Pop it under the broiler. You can fry anything. Take that mass and slide it onto your toasted ciabatta that you've hopefully covered with some kind of flavorful oil. I think chili, like chili infused olive oil, lightly brushed on the ciabatta. You're myocardial infarction thinking about that. You could do garlic, yeah. Although I think that's you're getting way too many God damn it, what's the word? Aromatics. It's too many aromatics. You want to that's why I'm thinking a little heat is really gonna bring it up a notch. Dorothea Barr, welcome to Zillionaire, and thank you so much for your patronage. It's very much appreciated. Hit me up on the Discord. I'll get you added to the country club after the stream. You don't even know what's in the meatloaf? Garlic bread would surely be complimentary. I think it's gonna drown out the flavors of the mustard and the ketchup. It's too much. Like garlic. It may be the one time I don't think I like the idea of garlic. It could work, but I don't like it. Thai chilies? Who at BlackRock runs your teleprompter? I don't know. His name's like Jeff or something. No problem, Posty. You know he's gonna put a piece of cheese on a slice of meatloaf and microwave it. I know, but let me have my few illusions. I need them. Well, yesterday you said Tesla could hit 218, 220, so nice job. Yeah, I know. I still have quite a bit of theta on my open puts. Where do you see it hitting on its next leg down? 200. Are you still at HE, unfortunately? Thank you, Greek. Now, how do I get out of my rad Q shares are up? Should we see them go up a bit more? I also have CSPs. Did not get out before delisting. Ooh. Are shares up? Ooh, shit. It's up 55% today. I don't know. I don't know what's going to happen with it. It's probably fucked. They're closing 150 stores. 154 stores. They had 202.2 thousand as of September 2nd. California will see the most closures. Pennsylvania and New York are also having a large number. They've proposed to close 400 to 500 throughout the bankruptcy. Either sell or let creditors take over the operations. Rite Aid's been unable to find the money to settle hundreds of federal, state, and private lawsuits alleging it oversupplied prescription painkillers. Its bankruptcy filing puts all of those suits on hold. It's part of the restructuring. They named Jeffrey Steen, head of financial advisory firm, as Rite Aid's chief executive. Interesting. Yeah, so I guess some good news. Although I do believe that the plan for current equity holders is that their holdings will be extinguished. Just a reminder, people that think Tesla has gone down a lot today. It was $100 at the start of the year, and it will be again, JFresh. It's like 10 cents. I mean, unless you bought in at 10 cents. For this meatloaf sandwich, are you talking about pan frying the already cooked meatloaf? Yes. Also, how would you make a meatloaf? You probably shouldn't in your home conditions, just for sanitary reasons, Farmville. If shares go to zero, then the CSP should just close without me having an issue. Well, I mean, you'll lose the money. So right now, if you sold 50-cent CSPs, if you were to exercise them, you would take a 30-cent per share loss. If you hold those until the shares are worthless, you'll take a 50-cent loss per share. Minus premium received, of course. Nope, it's not like a chopped cheese. Chopped cheeses are disgusting. Filth. No flavor. Fucking hot lettuce. I'll tell you exactly what a chopped cheese is, dork. Somebody takes ground beef, fries it, if you're lucky, salt and pepper, flips that onto a piece of untoasted, raw, almost raw, doughy. Let's call it doughy. Deli like a hero. And then they slap some cold cheese on top of that. Then they put lettuce and tomato, mayonnaise, ketchup, and mustard on the top part. Then they close it all, wrap it tightly in foil so that the lettuce and tomato become thoroughly steamed before you can open the package. No matter how little time passes between the guy handing it to you and you opening it, even if you were to open it before you pay for it, the lettuce will be fully steamed. What the fuck is this? Why? I don't know. It's disgusting. It's disgusting shit. Yeah, it's just a messy burger. But way worse. My meatloaf and cheese is not the same thing. Meatloaf and burger are different. I'm glazing mine with like a mustard ketchup glaze. The ingredients inside the meatloaf are not the same as just burger meat, right? There's breadcrumbs, there's garlic, there's onion, ketchup mustard reduction. Exactly. It's not. It's not a gourmet chop. You can go fuck yourself, Bob. Once or twice, Cobra. I request for a "this is Sparta" graphic every time we test and break through a 300 level. I'll think about it. The best cheese is the chemical one McDonald's uses on their breakfast sandwiches. I bought Tesla 215p for the 20th yesterday morning. I'm up over 500%. Somehow avoided IV crush, but I'm wondering if you see the trend continuing or oversold bounce likely. It's getting pretty close to its like longer term resistance here. Although it could just break down and keep going. There's really nothing stopping it. You're still out of the money though, so you do have to worry about theta. You season your meatloaf? I thought the whole point was the simplicity. Just throwing a whole 3-pound package of beef straight in the oven. That's not a meatloaf. That's just roast ground beef. I don't know if you noticed, Popcorn Trader, but that line has holes in it. I mean, it's a loaf of meat, but it'll fall apart. So it won't be a loaf when you're done cooking it, right? It'll just be a pile of roasted ground beef. My eyesight has been going pretty hard, so no, I didn't notice. I think that's a Texas thing. Hot meat pile. Excellent description, Jen. Probably all the benzene. Maybe. That makes sense. That's the appropriate response, by the way. Well, it looks like we're gonna try to push through this weak ass support at 43.25. So on ES, sorry, not SPX is nowhere near 43.25. Oh, they're pumping tech again. JPAS speaks in an hour, right? What do you think is the next level SPY will bounce off for another bear rally? Who said we're gonna get another bear rally? Nice try, driver. Uh, how do you toast buns? I set the oven to broil and put the buns in the top rack, and I forgot about them. I only remembered after cooking 2 frozen pizzas before the buns finally caught fire. In a pan? Face down in a skillet? Till toasty? I don't think a bun could hold up to a meatloaf sandwich. You might need a denser bread. Do we know what JPA is talking about? No idea. Haunted house and then dinner at Red Robin's? Nice. That sounds super fun. I hope you have a blast. I didn't know Red Robin's was still in business. Are you fucking with me? Do they exist? No, toaster's no good. That's gonna toast both sides of the bread. There's an entire reading list over on the Discord and the wiki. There's one in Portage, Michigan. Okay. Maybe if you have a good toaster, mine only half toasts one side of the bread. I wish we could just punch through 4,300. I'm sure you're not alone. Check it in. Are you still watching GME? It's still there. I wouldn't say I spend a lot of time watching it, but it's there. You can look at it if you want to. I think the daily DD summed up my feelings on GME right now. Have puts accumulated here? Yes. Plenty of red robins here in North Texas. Interesting. Is GME just going sub $10 at this point? No, there's one more resistance to the downside. There's gamma neutrals at like 12.50. You write daily DD? No. I write nightly DD and daily DD. Well, like 2 daily DD? Jesus, it's too much. What does gamma neutral mean? What's the point at which the market maker's gamma hedge is neutral? Neither positive nor negative. Like a superposition. Our love child PTR AQ is looking spicy today. I don't know what that is. Are you going down with RC, or is there a price you would get out? If it runs, I'm going to sell deep in the money covered calls. As many as I feasibly can. And we will buy them. I heard JPal will be speaking about his updated reading lists, including the intelligent investor, technical analysis of the financial markets, options as a strategic investment, and securities analysis. Nice. Fucking support. Gross. It was boring. 15 still looks pretty bearish. Hmm. I do like that. Mm. All right, so we got some put interest picking up at 42.90, 80, and 75. And a little bit at 43.05, actually. So some in the money puts as well. Nice, Pookie Maker. I picked up a few GME contracts for old times. If we hit GM, they'll 2,600%. If they don't, I lost $60. That's kind of how. That's kind of the boat I'm in. In order to reg show XRT, it needed to be covered, right? Suggesting that the $16 run was the XRT covering. Could this be true? Yeah, yeah, it could be. Although I think the total shares outstanding of XRT are still extremely low. If the total shares of outstanding of XRT jump up Friday significantly, probably get RT plus two, or well, by Monday morning. You know, update on AVGO. It's my opinion that 880.75 is around the point it becomes optimal to enter short puts. I don't have updated data on AVGO because we haven't updated it for like a year. That's not really a stock we watch. I don't know why it's like it's it's in our database, but it hasn't updated in a year. Ooh, that's weird. Why did I get logged out of that? Hmm. Uh, Increased put interest at 90, 80, 85, and 95. Getting fucking stacked to the downside here. Plenty of protection against any upside moves. Yeah, if we can slip 4,300, Vic should go wild. What was I gonna look at? AVGO. Oh, I see us touching 4,300 like it's a body of cold water and trying to figure out if it should just ease in or jump up. Okay, so yeah, it could turn around if it gets rejected here. Although it looks like there's quite a lot of support to the downside at 70 and 65. If it breaks to the upside, it's gonna fucking rip. But a little bearish right now. I've been getting progressively more bullish the last few days. Yeah, if this breaks, if AVGO breaks 880, it's gonna rocket. Probably not gonna do that with QQQ shitting the bed, but since you're stuck on a nailed Tesla earnings, do you have any predictions on Meta next week? Meta's earnings probably won't be very bad. It'll be more of the same shit. Zuckerberg blowing money on crap and them still making ad revenue. Oops. Yields looking like yields are still kind of stable today. They're not going too crazy. The 10-year is up a lot, but still under 5. Bigger push down here, maybe to 42.90. I got worms. I don't like the kind you need to take a pill for. How? So I hate that I hedged Tesla, but I probably won't hate hedging Meta. Um, Probably not. What's the name of the store I'm opening? We sell worms. Oh, okay. Congratulations on your small business venture. I I hope you kill it. I for sure thought that was a Farmville comment. Well, he probably already has worms, right? Do you know anything about Ehlers-Danlos syndrome and hypermobility? It's like a it's like a well, it's like a group of inherited disorders that affect connective tissues, right? I don't know that much about it. I know it leads to like yeah, like joint hypermobility and like probably like slow wound healing and stuff. It's a reasonable low for Tesla end of week. I mean, if it fails resistance here, it could drop. It could drop pretty rapidly. But it kind of is failing the resistance here. But 215, 207, 199. Those are kind of all on the table. My wife got diagnosed with it, and holy moly, is it a huge, awful thing to deal with. Ah, shit. I'm really sorry to hear about that. I know that there's like supportive therapy for it. Um, but yeah, that's shitty. There's different kinds of it, right? Um, I think some are worse than others. But I'm sorry to hear that, man. That sounds like a big thing. That's shitty. Pretty rare too. It's a fascinating syndrome. Yeah, I mean, like I remember reading about it in like textbooks at one point, but I don't really know that much about it. Any speech volatility? I mean, it's not like an FOMC meeting or anything. I don't think positioning surrounding the speech is all that strong. Our mom said the family grew up on the edge of a copper mine in Arizona and watched the nuke tests from their property. I feel as if it stems from that. Maybe. Although, I don't think there's any ties to it from radiation exposure. It's it's like a genetic condition, right? I mean, yeah, I mean maybe, but that's usually mutations don't work that specifically. My wife has a syndrome where she gets a new boyfriend on the weekends. Well, if it keeps her busy and gives you some free time. Fucking bounce. Where's this going? It's back to 4305. Is that profit taking or call buying? Hmm. A little bit of call buying at 4,300. Hmm. Ooh. Microsoft up, Apple up, Amazon up. And that's just on the 1 minute. Too impressive there. Yeah, I still think this might fail. Yes, retesting 43.33. This is a decent bump in volume. Still fighting not to lose control of vol. And how long do we have left? 30 minutes till Powell speaks. Let me see if I can find this speech. Speaking of the Economic Club of New York, hmm. Nothing on their YouTube. Give me 1 second. Mm, House Speaker election coverage. What the fuck? Oh, they've got it. Thank you, J Fresh. Just ups now. Still pressuring. Probably get back to like, I guess we could get back just sub 43.20 before 43.15, maybe. Before the speech. This is just positioning into the speech, right? What's our range for today? I don't know. I think that'll depend a lot on Powell, right? We could probably go as high as like 43.50. I don't know. He could say really bullish shit and we could run. There's still out of the money call interest for tomorrow. Calling it a speech is a stretch. It'll be more important. It's gonna be discussing the like macro environment and shit, so and Fed policy. So it'll be important. I mean, it's not like an FOMC meeting, but it's still gonna have some relevance. Ooh, that's good. Yeah, I'm gonna stream it. I think they'd still try to get it closer to 43.15 before the speech. He's speaking at the Economic Club of New York. All right. Downside positioning is actually not weakening that much here. All right. Do we know where he's talking? Sorry if I asked already. I was AFK. Okay. Do you expect JPOW to still be hawkish versus the other Fed members who are exceptionally dovish? I don't think any of the Fed members have been exceptionally dovish. I know Kashkari's comments were pretty hawkish. Mostly they've just said, like, wait and see, right? Like, they haven't really given any kind of indication. The only one who's super dovish is Bostic. But even if they've reached the end of their tightening cycle, that's not going to keep, like, that's not going to bring bonds down. And I don't think with the war going on, there's really any way for them to present a different narrative. You plan on taking profits on longer dated Tesla? 1 second. All right. What was the question I was answering? Sorry. I'm looking any better for an OPEX run. Kind of looks like the rest of the meme stocks right now. I mean, the idea that they're not going to raise the federal funds rate because the bond market's moved higher and created an effective federal rate increase for them is not. It's probably not going to influence their decision making very much, right? Bostic is a fucking shill. You don't plan on taking profits on longer dated Tesla puts, but if your stop's been set, no. I don't think it's gonna move hard to the upside. I got puts near the bottom. Unbelievable. All right, so probably just gonna sit here now. I would say chop between like 43.15 and 43.20 into the meeting. This is just under the call wall, right? So this is like bulls positioning to pump to the upside if the meeting's, well, bullish. You know, it'd be cool. 42.75. There's still a lot of time in the day. That was some crazy VIX shorting, though. Was there also potential he says bearish stuff? I don't know. I guess it'll depend on how much he's been paid. The last time he spoke at the economic club in Chicago, the fucking market ripped like crazy. Which investment bank do you think J. Powell will work at after he's done at the Fed? I don't know. Maybe he'll put his Nobel Prize towards doing more research into transitory inflation. Is it just shorting or actual selling? It's shorting. If it was selling, GME would be getting more liquid as the price dropped, which currently isn't happening. So I don't think there's a lot of retail sellers, but they're definitely getting scared, right? Given how persistent the shorting on GME's been over the last few months, last OPEX's reg show inclusion for XRT, the current reg show inclusion for XRT, and the continued persistence of shorts, I would say that there's probably a rather large amount of covering that needs to be done, and that the current shorting is being done largely in order to make that cheaper. Or the market crashes Monday and GME goes to $2. That was weird. My longer dated put position up 5%. My hedge up 30. Hot. Nice. I don't know what effect pre-OPEX XRT reg show inclusion is going to have. Every time GERT goes away, market dump. Get your puts now. You see the article on Ken's $1 billion estate in Florida? It's pretty cool. That's what I'd do if I got a bunch of money from GameStop for the last 2 years. You would not buy a Florida estate. Probably not. What's with RUT sitting near almost 3-year low? Also, any news on Japan? Or are they going to continue to bend over and take it for us? They're going to continue to bend over and take it, especially with heightened geopolitical risks. Small caps are undervalued. It's probably an opportunity in the future, but I'd wait for a market correction to resolve first. Have you started building a TAC position yet? I see it starting to get closer to your PT. No, it's not at my PT, so I have not. Although it is approaching it. I have no desire to buy it at any price above 1380. And I would prefer to buy it at 1150 or lower. But it is getting back there, which is nice. Just what you need, another fancy house. I mean, you have fancy houses and then you have billion-dollar estates. Florida GameStop workers don't take lightly to shoplifters, apparently. Apparently not. Buy low, sell high. Worst advice ever given, ever. Why? Yeah, I'm gonna stream Powell. He starts talking in like a minute. How can you know when it's over if it's selling off? Wait, what? Then go with the momentum. Yeah, I could do that. What was that? A bunch of options buying all at once? Pump attempt without JPEG? Maybe they don't want to take the risk of hearing out the full speech. I don't think he's said anything yet. I'll stream it when it starts. It hasn't started yet. Oh, now it's starting.
Yes.
Hold on. This is fucking unintelligible. What? Oh, he's saying this. Nice, wrongly radish.
His kind of service at the Fed.
Oh,
He was a visiting scholar at the Policy Center in Washington, D.C. They focus on federal and state fiscal issues. In 1997 to 2005, he was a president of the group.
nope. Let me try refreshing it, maybe. Nope.
With responsibility for policy on the policy sectors, policy issues.
I think they're trying to fix it, but it's
in New York City. So it's service they're saying certainly on the board to ensure that all education institutions and and also constituency of Washington, D.C. and Maryland. It stands that today is the jury is going to become He'll be joined in shares with David is now on the Wall Street Week.
Please fix the mic. Other channels are experiencing the same issue. It's the mic's fucked up.
That Jay is going to begin with some opening remarks.
Oh, okay. Thank you.
After he's concluded those remarks, he'll be joined in chairs with David Weston of Bloomberg. David is the anchor for Bloomberg Wall Street Week.
Thank you, Fluffy. There's some kind of protest going on right now?
Thank you very much.
Super stock in the building.
Thank you.
Is that Red Chess Queen? I don't know what the fuck they're saying. Who had protester reps at Economic Club of New York on their bingo card? They're saying whale teeth for MOASS. The world is crumbling. Bullish. Yeah. These are just Jamie Dimon's interns. I haven't turned all the way up. There's I don't even fucking know. Oh, that was the other stream. Because they went to like technical break. And then this one they've there's just nothing. There's chattering and protesters. Do you have theta for protesters? I think I got it covered. The sounds of the pores shrieking is deafening. Someone's screaming about "Don't fucking touch me." Sounds like security showed up. Why did the market treat the opening of this thing as if it were more important than the last several economic data prints? I think the bulls just took the opportunity to pump and save some of their bags. Harvey Weinstein is there. Is it market manipulation to buy options and stage a nonviolent protest that you into want to move a stock price? Genius strategy. I'm not sure your sentence meant anything. I mean, Brian Moynihan probably just sent all his interns over to the Economic Club of New York to complain about rate increases. People are like, we can't afford homes. But, I mean, the tell is that nobody poor could have afforded a home anyway. The rate change didn't make a difference. News reporting climate protesters? What the fuck are they doing there? They're chanting CERN puts. It's an economic club of New York luncheon. They have no jobs. What else are they supposed to do? That's not true. You're missing your luncheon. I know. I could have been there. Lunching on adrenochrome. Why is it significant? Stock market volatility is acting like this is an FOMC meeting. Because bulls are fucked right now, and they're trying to be a little less fucked, if possible. I saw the ES volume. Nothing was said that caused a spike. All of the price action happened before the fucking event even went live. How could the poorest do this? First ruining the audio and then interrupting with protests. I know. It's terrible behavior. But clearly they don't know how to conduct themselves at a signature luncheon. It's New York City. There's always a risk of poors wandering in. The speech is out? Oh, is it? Okay. I'm guessing he didn't say anything bullish. Tom Segura is seething right now. Nope.
Jay is going to speak for a few minutes and will provide opening remarks, and then he's going to be followed by a conversation with Bloomberg's David Weston. David is the esteemed anchor of Bloomberg Wall Street Week. This conversation is on the record, and we do have media on the line and in the room. Let's welcome Jay to the stage. Jay, for you.
Thank you, Bob. Thank you, Bob, and thank you to everyone for being here today. It's great to be back at the Economic Club of New York, where I last visited before COVID. So before our discussion, I'll take a few minutes to discuss recent economic data and the outlook for monetary policy. Incoming data over recent months show ongoing progress toward both of our dual mandate goals, maximum employment and stable prices. And I'll start with inflation. By the time we raised rates in March of 2022, it was clear that restoring price stability would require both the unwinding of pandemic-related distortions to supply and demand, and also restrictive monetary policy to cool strong demand and give supply time to catch up. These forces are now working together to bring inflation down. After peaking at 7.1% in June 2022, 12-month headline PCE inflation is estimated at 3.5% through September. Core PCE inflation, which omits the volatile food and energy components, provides a better indicator of where inflation is heading. And 12-month core PCE inflation peaked at 5.6% in February 2022 and is estimated at 3.7% through September. So clear progress there. Inflation readings turned lower over the summer, a very favorable development. The September inflation data continued that downward trend, but were somewhat less encouraging. And shorter-term measures of core inflation over the most recent 3 and 6 months are now running below 3%. But these shorter-term measures are often volatile, and in any case, inflation is still too high, and a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. We cannot yet know how long these lower readings will persist or where inflation will settle over coming quarters. While the path is likely to be bumpy and to take some time, my colleagues and I are united in our commitment to bring down inflation sustainably to 2%. In the labor market, strong job creation has met a welcome increase in the supply of workers, due both to higher participation and to a rebound of immigration to pre-pandemic levels. Many indicators suggest that while conditions remain tight, the labor market is gradually cooling. Job openings have moved down well below their highs and are now only modestly above pre-pandemic levels. Quits are back to pre-pandemic levels as well, and the same is true of the wage premium earned by those who change jobs. Surveys of workers and employers show a return to pre-pandemic levels of tightness, and indicators of wage growth show a gradual decline toward levels that would be consistent with 2% inflation over time. To date, declining inflation has not come at the cost of meaningfully higher unemployment, a highly welcome development, but also a historically
This is
unusual
probably going to push up again.
healing of supply chains in conjunction with the rebalancing of demand and supply in the labor market has allowed disinflation without substantially weaker economic activity. Indeed, economic growth has consistently surprised to the upside this year, as most recently seen in the strong retail sales data released earlier this week. Forecasters generally expect GDP to come in very strong for the third quarter before cooling off in the fourth quarter and next year. Still, the record suggests that a sustainable return to our 2% inflation goal is likely to require a period of below-trend growth and some further softening in labor market conditions. Geopolitical tensions are highly elevated and pose important risks to global economic activity. Of course, our institutional role at the Fed is to monitor these developments for their economic implications, which remain highly uncertain. But I will also say, speaking for myself personally, I found the attack on Israel horrifying, as is the prospect for more loss of innocent lives. Turning to monetary policy, the FOMC has tightened policy substantially over the past 18 months, increasing the federal funds rate by 525 basis points at a historically fast pace and decreasing our securities holdings by roughly $1 trillion. The stance of policy is restrictive, meaning that tight policy is putting downward pressure on economic activity and inflation. Given the fast pace of the tightening, there may still be meaningful tightening in the pipeline. My colleagues and I are committed to achieving a stance of policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we're confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience of economic growth and demand for labor. Additional evidence of persistently above trend growth, or that tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of policy.
Huge out-of-the-money call buying.
Along with many other factors, actual and expected changes in the stance of monetary policy affect broader financial conditions, which in turn affect economic activity, employment, and inflation. Financial conditions have tightened significantly in recent months, and longer-term bond yields have been an important driving factor in this tightening. We remain attentive to these developments because persistent changes in financial conditions can have implications for the path of monetary policy. My colleagues and I remain resolute in our commitment to returning inflation to 2% over time. A range of uncertainties, both old ones and new ones, complicate our task of balancing the risk of tightening monetary policy too much against the risk of tightening too little. Doing too little could allow above-target inflation to become entrenched and ultimately require monetary policy to wring more persistent inflation from the economy at a high cost to employment. Doing too much could also do unnecessary harm to the economy. Given the uncertainties and risks, and given how far we've come, the committee is proceeding carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. Thank you. I look forward to our conversation, David.
Thank you very much, Chair Powell, for being with us today, for the remarks, and for having a bit of a conversation here. We really appreciate it. It strikes me it's a particularly propitious time, given everything that's going on in the world and in the economy. There's a lot to talk about, a lot to discuss. Let me start with something you just referred to, which is the surprise to the upside in the economic data, despite, as you termed it, I think, historically fast pace of growth. Are you surprised at how resilient the United States economy is? Just today we got jobless claims numbers, surprised because they were low. We got the retail sales numbers you mentioned. We got industrial production. Across the board, it seems like a very strong economy, despite all you've done to try to slow it down.
Yes, so we certainly have a very resilient economy on our hands. We've got the economy growing strongly. If you think back a year, many forecasts called for the U.S. economy to be in recession this year. Not only has that not happened, growth is now running for this year above its longer run trend. So that's been a surprise, driven largely by consumer spending, driven by a very strong job market with people getting jobs with first high nominal wages, and then as inflation has come down, real wages, which is spurring spending. And we've also had inflation coming down. So, it really is a story of much stronger demand. There may be some ways in which the economy is less affected by interest rates. It's hard to know precisely, but for example, many companies, any company with bond market access will have termed out its debt, right? And therefore may not be feeling the effects of higher rates. The same may be true of homeowners who have a long-term fixed rate, low rate mortgage, who then are therefore not, because it's not an adjustable rate or a higher rate, they're not feeling that increase in rates. So the economy may be somewhat less susceptible to the effects of rate increases. On the other hand, if you look at interest-sensitive spending, these are very much
now he's saying bearish
the
shit.
places where we expect to see and do see.
This is gonna be a fun day.
in housing or in, the housing sector has been very affected by higher rates, as purchases of durable goods. If you look at surveys, people will not say that it's a good time to buy a car or a house, quite the contrary. So we see policy working through its usual channels.
Well, I'm glad I didn't overpay for one of those calls.
And again, it's all happening in a context of
Jesus fucking Christ.
We've
What a
heard
crazy day.
Maybe the terming out of debt, as you say, both corporate debt and household debt, may diminish the effectiveness of rate hikes. Do you have a view on whether that's true? And if it is true, what does it say about monetary policy? Does it mean you have to go farther in the rate hikes, or do you just not have the power to affect it?
So no, I don't think that there's a fundamental shift in the way that interest rates affect the economy. There may be some differences in this cycle because of what I mentioned. As I mentioned, we are seeing the effects where we expect to see them, which is interest-sensitive spending and also asset prices to some extent, and the exchange rate, which you're also seeing a strong exchange rate, which is disinflationary. So I don't think there's a fundamental change in the way monetary policy affects the economy. And again, it goes back to just very strong demand. We take the economy as it is. We take fiscal policy and the economy and all the things we don't control. They come to us, and we conduct policy always to achieve maximum employment and stable prices. So we just take what comes. The fact that we have a strong growing economy, a strong growing labor market, and inflation coming down. These are the elements that we want to see that to achieve the outcome we want.
Fresh.
It may take more time, but ultimately, this is the kind of thing you would want to see along the path to getting through this without a big increase in unemployment.
How much effect thus far has the Fed had? We all have memorized now long and variable lags. How long and how variable, and where are you in that process? Are you at the 25% point, the 50%, in terms of seeing it in the effect in the real economy?
So there's no precision in our understanding of how long lags are. One thing that has changed in the modern era is that markets now, over the course of the last 30 years, central banks have decided, instead of being secretive, to be very transparent. And what that has meant is that markets move actually well in anticipation, well before our policy moves. So the transmission from policy moves to financial conditions actually happens before the moves now, whereas that was not the case 50 years ago when Milton Friedman coined the phrase long and variable lags. So, but now you have financial conditions changing, and the question is, how does it affect the economy? The standard channels are asset prices, interest-sensitive spending, and the exchange rate, for example. And we do see that happening, just not as fast as we would like. And I would attribute some of that to just stronger demand. Household savings were turned out to be higher. Household spending has been stronger, and that's by far the largest part of the economy.
In order to conduct monetary policy effectively, do you need at least a hypothesis about how much has already hit the economy? Because it's hard to know how much more you need to do if you don't know how far you've come.
So on lags, I think if you think back, it's been a year since the last 75 basis point hike we did. It was at the November meeting in 2022. The first one was in June, so it's more than a year. So we should be seeing the effects. By the way, they don't all just arrive on one day. They arrive and then they're thought to peak and then to diminish. So there's a lot of uncertainty around lags. And one of the reasons why we have slowed down significantly this year is to give monetary policy time to work. The truth is, though, you can find academic support for different speeds and duration of lag. So we have to use our eyes and a little bit of risk management and patience in slowing down the pace to make sure that we are seeing the full effects. And I think, again, that's part of why we've slowed down this year. We went very quickly in 2022 to catch up to where we needed to be, and now we're moving carefully with these decisions.
So when you spoke back in August of 2020 and sort of laid out the revisions to the framework, as it were, you said that in terms of anticipated growth, the sort of consensus had gone from something like 2.5 to 1.8%, I think were the numbers you laid out in that. Where are you now? Where's the Fed? Where are you? And what you think basically the long-run growth is? Long-run
potential growth is not something that moves around a lot over time, but my own guess is it's around 2%. I think that the standard mainstream view would be a little bit below 2%, but I would just say 2% real growth over time. And what causes growth is growth in hours worked plus growth in productivity. Growth in hours worked is a function of population growth in the long run, and also labor force participation. Many things affect productivity, but if you drop in reasonable, standard, longer-term estimates of hours worked growth and productivity, which is just output per hour, productivity growth, you get something around 2%, and that's higher than most other advanced economies.
As you look at it, do you see historical precedents for having a growing economy with high rates over a long period of time? I mean, as you look back, is it like the late 90s, for example? What analogies do you draw as you try to determine what this might be doing to the economy over the longer term?
So that's really a question about what the level of rates will be going forward, what the neutral level will be, and I think it's very hard to know confidently what the answer to that will be in 5 years. Some of the reasons why rates were low for the last 25 years were just the aging of the global population and globalization, and so lots of savings and relatively with an aging population, savings greater than investment, so rates are lower, and productivity was low. So all of those led to low interest rates. So what has changed with the pandemic? You might see less effects from globalization. Certainly demographics, the aging of the global population has not changed. This is a discussion we're having on an ongoing basis. It doesn't really affect current policy, but where will rates settle out? What will be a normal rate? So if a typical Fed tightening cycle would leave you at 5 or 6%, and this is in the before the pandemic and before the low inflation period, you would have had Fed rates in 4 or 5% or even higher frequently. Are we going back to that? I really don't know. I wouldn't want to speculate. My guess is it'll be somewhere in the middle, but I don't know. I think we can say this now. The effective lower bound is not an issue. We were very concerned about that. Right now, we're very far from the effective lower bound, and the economy's handling it just fine. But that's because we're at a time of really elevated demand coming out of the pandemic as we reopened with fiscal stimulus and monetary stimulus. We have very strong demand in the United States. Hard to know what the economy will want in the way of interest rates when 5 years from now, when all of the effects of the pandemic are behind us.
You mentioned the long-term equilibrium rate, which you talked about again back in Jackson Hole in August of 2020. Back then you said you thought the sort of consensus had come down. I think it was from like 4.25% to 2.5%. Where is it today?
So I think by any reckoning, long-term interest rates and the neutral interest rate came down steadily over the course of several decades. So where is it today? I don't know. We're finding it basically. The idea was, I think the median indication of what the real neutral rate was around 50 basis points before the pandemic. It may have risen in the near term. The real question that matters, though, is will it rise in the long term? And that we don't know.
But do you need to know it in order to conduct monetary policy? You must have to have at least a theory. I'm not saying you have to be right about it, but you have to have a hypothesis, don't you? As you look at the data, you have to put the data through some sort of a theory.
So we all write down our estimates of the longer run neutral rate every quarter in the summary of economic projections. And that's based on models. It's based on also looking out the window and including lags, thinking how are our current rates affecting the economy. So the evidence of your eyes is that the economy is handling much higher rates, at least for now, without difficulty. So notionally, that might tell you that the neutral rate has risen, or it may just tell you that we haven't had rates high enough for long enough. You're right, though, but we have models for everything. We have formulas for everything. Ultimately, as a practitioner, we have to be focused on what the economy is telling us, even taking lags into account. What's it telling us? Does it feel like policy is too tight right now? I would have to say no. I think the evidence is not that policy is too tight right now. And we're at 5.25% to 5.5%.
Do you think we're entering into a new phase in monetary policy? We had the Volcker disinflation, I think you referred to it as, and then we had sort of inflation targeting for a time. There was concern about secular stagnation. We were pushing the zero bound, as you said. We were concerned about that. And then we had the pandemic, and we had the real problem with inflation. What's the next phase look like? How would you describe it?
What we've been through is, in all of the advanced economies around the world, was a period where the effective lower bound, the proximity of interest rates risk-free interest rates to the effective lower bound, which is 0 or a little bit less, was a big problem for monetary policy. And just rates came down and down and down. And the problem is, if rates are going to be close to 0 in good times, then how do you cut? And so have central banks lost the power of their most important tool, which is interest rates? This was a subject of a vast literature in monetary policy research for 20 years. And you know, the most common answer was some kind of a makeup strategy. So you would credibly promise to run inflation a little bit hot and above 2%, and that would anchor inflation to 2% to counter the times when it was below. So that was a very serious problem, which filled books worth of research. Then comes the pandemic, then comes the response to the pandemic, and then comes the pandemic inflation, not just in the United States, but everywhere. The question is that a secular change, or are these factors that brought us to that place, are they still out there waiting to come back? And, you know, books are written on this subject now. You can argue that, and some have argued that effectively the last 20 years before the pandemic were kind of a perfect storm of disinflation, and now that's all gone, and we're going into a more inflationary period that will be characterized by more supply shocks and things like that, and therefore more inflationary pressure. So are we going into such a, I don't know. I mean, all I can tell you, I think it's unknowable, and, you know, great theorists and researchers have different views on this. It's not something you can settle in advance. We'll have to see. I think our issue is right now trying to achieve a sufficiently restrictive stance of policy to bring inflation down to 2% over time. That's what we're really focused on.
Whenever any of us go, particularly institutions, go through tumultuous times, and goodness knows you've been through a tumultuous time, we look back and think, okay, what did we learn? Sort of an after-action report. Look at the pandemic and the pandemic inflation. What would you say you learned in terms of macroeconomics, in terms of the economy, from that experience?
So hindsight is always a wonderful thing, right? I think the fair way to judge the actions that were taken is to put yourself in the place of legislators and policy, other, you know, and central bankers around the world. And there was no playbook. You know, we hadn't seen a global economic shutdown. People were thinking that the pandemic might kill a whole lot of people and that we wouldn't have a vaccine for 5 years. We might not have an economy for 5 years. So these things were all very possible in March of 2020. And so we pulled out all the stops, and Congress pulled out all the stops. With the benefit of hindsight, could we have done a little bit less and had a little bit of inflation? I guess we could. But I think if you look overall at the performance of the U.S. economy, our economy is the strongest.
That was a nice return.
We're actually also making the most progress on inflation, but we certainly have the strongest growth. We're back to prior growth trend, not just level of where we were. We're actually back to the prior trend. The labor market, the last time we had this many consecutive months of unemployment below 4% was in the late 1960s. So it's more than 50 years ago. So our economy is doing very well from all of that. But if you had perfect hindsight, you might not have had as much inflation if we'd done less. Although other countries who didn't do as much as we did also had substantial inflation problems.
I think my question was just a little bit different. It's not so much of assigning blame or saying, did somebody make a mistake, as are there things that going forward would change the way you conduct monetary policy that you learned from that maybe nobody had reason to know at the time, but it was an experience you went through?
Well, we were in a time of a very long time, in a reasonably long time, of disinflationary forces. And I think everybody's instinct had been attuned to risks coming from this direction, which is too low inflation. And so what this has taught us is that now that period is over, and we now have probably going forward a more balanced set of risks where high inflation and low inflation are both risks. In fact, right now the risk is still high inflation, but I'm assuming once we get back to 2%, we won't have that. But we've certainly learned that.
Ooh, yields are rocketing. I mean, 10 years about to cross 5.
Events are the possible range of events is so much wider than what we think it is on any given day, right? The tails are so wide, and it's just not human nature to constantly be thinking about things that are way out in the tail, but they happen in financial markets and in economies. They happen far more regularly than they should.
I suspect every person in this room is well aware of what's going on with yields with bonds. It's been a big story, particularly in the longer end of the curve. What is your understanding of what is going on in the bond market and why those yields are going up, particularly again at the longer end of the curve?
So it's really two questions. One is why is it happening, and the other is why does it matter for policy? And so I would say on the why is it happening question, I think it's appropriate to have a little bit of humility. It's always hard to say exactly what's going on with longer term yields, but this is what I think we can say. First, what it's not. It's not apparently about expectations of higher inflation, and it's also not mainly about shorter-term policy moves, so Fed funds moves over the next year or two. Really, if you can look at the 2-year, for example, and 2 years moved up a little bit since September, but really the move is in longer-run bonds. So it's really happening in term premiums, which is the compensation for holding longer-run securities, and not principally a function of the market looking at near-term fund rate. I think a few other ideas about, there are many candidate ideas, and many people feeling their priors have been confirmed by this event, I'll say, as well. But so one would be just that markets and analysts are seeing the resilience of the economy to high interest rates, and they're revising their view about the overall strength of the economy and thinking even longer term this may require higher rates. That could be part of it. There may be a heightened focus on fiscal deficits. That could be part of it. QT could be part of it. Another one you hear very often is the changing correlation between bonds and equities. If we are going forward into a world of more supply shocks rather than demand shocks, that could make bonds a less attractive hedge to equities, and therefore you need to be paid more to own bonds, and therefore the term premium goes up. So all of those are possible ideas. Then the question is, does it matter for us as long as I'm talking about this? So the way I think about it is, we change our policy. Actual and expected changes in our policy affect financial conditions, and persistent changes in financial conditions affect economic activity, hiring, and inflation. So one question is, are we seeing the longer run bonds, are they the increases in rates, are we seeing those come through in financial conditions in a persistent way? And I think if you look at financial conditions indexes, the answer so far would be yes, you are. Persistence, it will be a matter of just seeing with our own eyes, but certainly they're coming. If you look at financial conditions indexes, they're showing tightening, and it's a lot because of longer rates. Then the question is it endogenous, and is it just because the market expects us to take things, to take further actions to tighten monetary policy, in which case if you have to follow through. But that doesn't seem to be the case. It doesn't seem to be principally about expectations of us doing more. It seems that the other factors are the more prominent ones.
Another question is,
bottom line though, that means it probably does over time. It makes sense. It's something that we'll be looking at.
Well, that's the question I was asking, is over time. From what you understand right now, do you think this is a temporary phenomenon, or do you think there are structural factors, whatever they are, and we can talk about what they might be, that would really, this is the future that we're looking at now?
Well, so of the factors I just listed, some of them are shorter term, some of them are longer term, and some of them could be either.
Still looks like
so
put
for
buying's
example,
continuing.
Concerns over fiscal deficits, that could be a longer term factor. The change in correlations between stocks and bonds could be a longer term. I don't think we know. I think, basically bond prices are set by supply and demand.
Yes,
Supply
volatility
of
is
treasuries
actually fucking
is
crazy.
a known thing, but demand can be affected by any and all of these theories, and also just by sentiment too, which is hard to characterize. So, markets have been volatile. They've been longer. You've seen the rates moving up and down a lot. I think we have to let this play out and watch it. But for now, it looks. It's clearly a tightening in financial conditions, and so we'll be watching it carefully.
Talking about the fiscal side, and you've been very careful repeatedly to say you want to stay in your lane, you're not responsible for fiscal issues. At the same time, you have to take into account, and it looks like the United States is going to have to borrow a fair amount of money. By the way, other countries are as well around the world. We have a big supply of treasuries coming on board. To what extent do you think that is a longer-term issue? And let me tie it back to something you referred to in your remarks, actually. When we see geopolitical conflict around the world, like in Israel, like in Ukraine, some of the buildup with respect to China, the defense spending is going to be elevated for the United States and for other countries. Do you take that into account in figuring monetary policy? Because it may well mean that we're borrowing a lot more money than we have in the past.
So we, of course, see the same things that everyone else. So I just came back from IMF meetings this weekend, and there's a lot of talk of the very large resource demands that organizations like the IMF and of course countries are facing, and the need for substantial amounts of revenue. You mentioned military. There's also dealing with climate change and things like that. So there's a lot of that. We don't, as you mentioned, we don't comment on fiscal policy. Actually, the fiscal authorities have oversight over us, and not the other way around. So we stay away from that. So I would just say everyone knows that it's not a secret, and about all I can say is we know that we're on an unsustainable path fiscally. It's not that the level of the debt is unsustainable. It's not. It's that the path we're on is unsustainable, and we'll have to get off that path sooner rather than later. It's not really something, though, that affects a monetary policy decision about how much we raise rates in the next 6 months. It's not going to be driven by. If there were some vast new fiscal policy that were about to be enacted, and then that would have an effect on the models and have an effect on projections, and indirectly that would affect us. But we would not be in a position of responding directly to fiscal policy.
When we talk about the treasury market, obviously there's buying and selling, and the United States government is issuing a lot of treasuries. There's also a question of who's buying, and we now have one buyer who stepped out of the marketplace, namely the Fed, which is a big buyer. At the same time, we're getting reports that maybe some of the overseas buyers may be pulling back.
Yeah, the
as
TIPS
well.
auction is at 1 o'clock.
In assessing where we're going with long-term bond yields.
So actually, I think buying by overseas entities has actually been pretty robust this year. So there have been some small changes, but I think by and large they've been buying robustly. Again, we look at the broad financial conditions. We look at interest rates, other asset prices. That's what we look at. We don't focus on fiscal policy. We wouldn't change monetary policy because of, for example, because we think that the U.S. is on an unsustainable path. Everyone knows that. We're just going to do monetary policy to achieve maximum employment and stable prices. And that's how we think about it.
I'm curious, though, one of the things you're most concerned about is the real economy, what's going on in the real economy. You distinguish yourself from some of your predecessors in that you have a significant exposure to the private sector, not just the public sector, academics. As you talk to CEOs, people in business, what are you hearing about the cost of capital? Because these bond prices are really affecting cost of capital for the first time in a while. There was a long time the cost of capital felt like it was almost zero. And business changes an awful lot when the price of money goes up.
I talked to several people this week who run companies, and they each said that the economy remains strong and that they don't see the consumer. You see, there's some areas where spending is softening, but
here's the
overall,
problem,
the
J.
retail
Powell.
sales number,
You
consumer
need
is
to
strong.
tell people that even though the economy
The
currently
volume's not
looks
going up
strong,
very much, but
you're
companies are
hamstringing it.
profitable. You don't. Now, if you get to where I think the cost of capital would really matter would be for smaller companies and early stage companies, and that really does matter. So we don't have a lot of tools. We have interest rates.
Fucking the pores.
They're far
Nice.
from perfect. It's famously a blunt tool, but it's what we have to get inflation down. And really, the world counts on us to deliver low and stable inflation.
That's not
what we
true.
have to do.
You could
And,
sell more of your assets at a
like
faster
there are,
pace.
we know that we're
You have
having
two
negative
blunt
effects on,
tools.
we had the home builders in this week. It's a very tough time in the whole home building industry, and we know that. But ultimately, what we want to get back to is a long period of price stability. That's the best thing we can provide, and that policymakers and businesses and everyone and people can just lead their lives not worrying about inflation. This is what we can deliver. It's what we have to deliver, and this is the time. Our independence is not for times when we're really popular. It's for when we're doing something that really the public counts on us to do, notwithstanding that it's challenging and difficult, and higher interest rates are difficult for everybody.
You have not wavered from your commitment to 2%. You did it again today, 2%. No question about it. There are those who suggested, including some colleagues in the Fed, that maybe the bond market is doing part of your job for you. Is that the way you see it?
Look, I would say it this way. The whole idea tightening policy is to affect financial conditions. And to the extent higher bond rates reflect that they do, they're producing tighter financial conditions right now. So that's how monetary policy works. That's literally how it works. So again, in principle, as long as bond rates are going up for some reasons, and they're not going up just because they expect us to do things, so that if we don't do them, they'll come right back down. And we don't think that's the case. Actually, I don't think it's the case. It doesn't seem to me that's where analysis leads you. Then sure, that's a tightening. That's exactly what we're trying to achieve.
And therefore, it seems like almost arithmetic. It must reduce some of the impetus for you to continue to raise rates.
At the margin, it could. I mean, I think that remains to be seen. And by the way, I'm not blessing any particular level of longer-term rates, but just in principle, that's right.
So let's talk about the labor market. You referred to that in your remarks as well. And as you say, vacancies have come down some, although they still are pretty elevated, if I'm not mistaken. Quits have actually gone up some. It seems to be a tight labor market. What do you make of what's going on in the labor market right now?
Labor market has been extraordinarily strong. So what happened in the pandemic was we had a negative labor supply shock, is one way to think about it. So a whole lot of people left the labor market when the pandemic happened and then didn't come back. And so when the economy reopened and everybody, there was revenge travel and revenge everything, very strong demand, and there just weren't the people. So you had 2 job openings for every person actively seeking employment. We've never been anywhere near close to that. There was panic, and wages and bonuses, and particularly in things like in-person services where people had not gotten big wage increases and didn't want to come back to work. So that's where we were. So since then, there are very many signs that the labor market is getting back into balance, and I talked about some of that in my remarks. Surveys of work, we survey businesses. We don't do it, but other people survey businesses and say, are workers plentiful? And that measure was no, but now it's back to pre-pandemic levels. You survey workers, are jobs plentiful? And that was at an all-time high, and now it's still high, but back. So wage increases are coming back down to more normal levels. Job openings are down from 2 to 1.4. They were at 1.2 in the very tight labor market of 2019. By the work week, by so many measures, the labor market is gradually cooling. And part of that is this, all through 2022, we thought we were going to get more labor supply, and we didn't. And I personally thought, well, I guess we won't get any. And then we've gotten a substantial amount this year. The female labor force participation is in prime age workers is at an all-time high, which has to be related in some way to work from home. But labor force participation increased, immigration increased, and now you see that in the overall cooling of the labor market. So even though job creation is still very high, there are the workers to fill those jobs. And again, businesses will tell you that it's very different. It's still a very tight labor market, but it's loosening.
Coming back to your goal of 2% inflation, what have you learned from this experience about the relationship between inflation and labor? I mean, there's a lot of talk about a Phillips curve, whether it still applies, whether it's weaker, what is it? What's your hypothesis right now with the relationship between inflation and labor market?
Well, let me tell you what it was before. So one of my favorite charts is just the slope of the Phillips curve over 40 years. And so it shows the relationship between unemployment and inflation. If you go back to the high inflation of the 70s, there was a very tight relationship. And that relationship went down and down and down to the effect where the Phillips curve, there was almost no relationship, meaning the Phillips curve was very, very flat. Now, actually, if you just ignore cause and just look at the data, it will tell you that the relationship is back. Do we really think that's a sustainable thing? I don't know. What happened, though, was that people came to seriously expect 2% inflation, something like 2% inflation. And if people expect that, if companies expect it and workers expect it and you expect that in your shopping, then that's what will happen in a way. And that's what happened. So even in very, very tight labor markets, we didn't have high inflation. I was at the Fed since 2012 as unemployment went from 6 to 5 to 4 into the 3s for the first time. And the models were all saying that we should be seeing some inflation, and we never really saw 2% inflation on a sustained basis during that era. So we learned that the Phillips curve was really flat. Some pronounced it dead. Now, I don't think most of the inflation we're seeing at all is from the Phillips curve, though. I think it was really the collision of very strong demand, really strong demand, with with constrained supply. Cars being a great example. Many people wanted cars, didn't want to ride public transportation, wanted to move to the suburbs. Unlimited demand for cars. Interest rates are low. Yet we couldn't get semiconductors, so there are no more cars. Car production went down. How do you solve that problem? Prices just go way, way up for cars. That's how you clear the market. So that's a classic example of what happened here. It really wasn't about the Phillips curve. It was more about constrained supply and demand more broadly, especially for goods at the beginning.
Let's turn to another responsibility of yours, which is the banking system. Last March, we had something of a scare because of, I guess, interest rate risk with Silicon Valley Bank and then some others. Are we through that now? Where are we in that process? Are you resting easy?
So what you pay us for is not to rest easy. We don't do that. But I would say where we are is this, though. Things have certainly settled down. We see the funding markets is fine. We see, and we paid a lot of attention to banks that looked anything like the banks that had the problems, and made sure that they had credible liquidity plans and plenty of liquidity and all of that. And so I think all of that has worked. And we set up this facility that's available for banks to borrow. And so all of that has led to a real settling down. But, our job is to be on the case, and, we're still on the case. And we'll keep after that.
There's still
Banks are
a little bit
generally
of
very
buying
well
coming
capitalized
in.
and highly liquid in our country. Banks are strong.
It's kind of
we
just
benefit
like
from all
puts
these
and
years of
calls or
reform under
squeezing
Dodd-Frank
back and forth.
Basel
There's a
III
lot of
that
vol
we went through.
and a lot of
with
a
former
lot,
Governor
or a
Tarullo,
lot of volume
and many others.
and a lot of
And
volatility.
so we benefit from a very strong, well-capitalized banking system that's much better at managing its risks than the one that entered the global financial crisis.
Very well capitalized, but you want some more.
Downside sub 4,300
Basel
weakened a little bit
Basel
on
III
this
proposal,
bounce.
which is, it's a rule that's
But
out for comment. So
the
there's
put
not a lot I
interest
can
from
say, but we do
43.15
expect
to
a lot of comment,
4,300
and we
is
do
still
expect to
quite
take those
strong.
comments very seriously.
Talk about commercial real estate. There are some concerns out there in the marketplace of what's going on because obviously there's a repricing that comes
be
with
careful
your
with the
increased
upside
rates.
here because
It's
it
thought
can
that there's some
revert
real estate out there
quickly.
that is not worth the money that was originally financed with it. How concerned should we be about that as something lurking out there that could really affect the system overall, not just the people invested?
So there's work from home, and that's affecting downtown real estate in a lot of big cities, and higher rates as well, as you point out. So this is an issue that we pay a great deal of very careful attention to. Commercial real estate is not a principal risk or a
Can they
major
squeeze
risk
out
for
the
the very
puts?
largest banks.
So
It's
yeah,
much
but
more for regional and
I would say
really
right
the
now-
smaller banks have proportionally a much larger exposure
To
real
what
estate,
end?
So commercial real estate. So what we've done is the supervisors are in there looking at real estate
like upside
portfolios,
upside
working with
above
banks to make sure that they have plans to
43.25
deal
still
with
seems
the
fairly
problems they have
limited.
in their portfolio. These problems evolve over time. They don't
And
land with
43.20
great suddenness
puts
like a
right
market
here
event.
are still
So
quite strong.
We're working with all of the bank regulators are working with banks that have concentrations of troubled real estate to work it out. There will be losses for sure. You can drive down through most downtowns, in many downtowns anyway, and see buildings that are empty and things like that. But we're working through it, and we're on that case, and don't see it as as presenting much broader problems. But our job is to make sure that it doesn't.
As you mentioned, regional banks are where a lot of people focus on this. As you conceptualize the banking system, what is the role of the regional banks? We have the super big banks that don't look like they're going anywhere. And we've got the community banks, the smaller banks that we understand are critical, particularly for small businesses and local context. But what about the regional banks? How much pressure is on them? And what would the damage be to the system if, in fact, there was more consolidation with some of the big banks?
I think the regional banks are very important, extremely important. We have 4,500 banks, which is a lot more than any other country per capita or per dollar of GDP. But we have, our GSIBs, the largest banks, are the leading banks in the world in profitability and in their success in their business. We have community banks who deal in smaller communities. But we also have these great regionals, and I think they do a great business with many companies, and I do think their business model is under pressure, and I would not like to see us add to that by treating them exactly like GSIBs. I think they don't need exactly the same attention that a GSIB gets. So But I would say I personally think, and I think we at the Fed strongly think that the regionals and the smaller regionals are an enormously important part of our banking system.
Okay, you've been very generous with your time. Really appreciate it. I have one last question. Are you having a good time? And, and if so, why?
Now or?
No. I assume this wasn't that pleasant, but in general, are you enjoying your job?
I would say this. First of all, it's an incredible honor to do this job. And every day I do it, I feel so fortunate and so lucky and blessed to be entrusted with this. And, all I want to do is do the best job I can for the public that we all serve. And yes, there's a lot that is enjoyable about it, but mostly it's just so important to get it right, and that's what we're trying to do.
Thank you so much, Chair Powell. It's really good of you. Thanks a lot.
Thanks, David. Thank you.
Well, let me just conclude with 4 thank yous. First, thanks to the team from the Economic Club that organizes these events. It doesn't happen because anyone on the dais does anything. It happens because the team works hard and organizes it and makes it go so smoothly. Number 2, thanks for our audience, and our members, both here in the room and online. Let me also say thanks to David. You did a great job engaging with the chairman. And I think I saved the best for last. Jay, thank you very much for your talk today. Thank you for the time speaking with David. And all of us say very much when you read and listen to your contribution to the Fed in your various roles, there's only one thing to say, and that is thank you very, very much for your service. Thank you. Everyone enjoy lunch.
So I don't think anything there was super unexpected. We've obviously had a lot of volatility throughout the speech, and that's because he did make a statement on economic conditions, and he made a statement about the bond markets, which is kind of what we were expecting to hear. I don't think anything really changed from it. Yields are up. Still pretty substantially. The 5 and the 20 above 5%. The 10-year almost at 5%. It got very close earlier. Even on the upside here, and I don't think that's really gonna change drastically. We still have that call wall at 43.25. It's providing some padding for these moves, but I think ultimately more of this is going to break down. Tips came in. How was it doing? I didn't get a chance to look at it yet. So it looks like we got the 8-week came in low and the 4-week came in lower. Mortgage rates moved up on the 15 and 30 year. 5-year tips at 2.44. So a little bit of a trailing tail on the 5-year tips, I think. Well, yeah, I think so. So I haven't cut my QQQ put hedge yet. Am I dumb? I was gone. I don't know how much theta you have on it, but yeah, missing the downside there twice wasn't good. It could go down again. But I mean, you have already probably missed 2 opportunities to close it. I missed the first one because I wanted to hold open my QQQ puts into his actual speech. But then I sold on the second one. Pretty close to the bottom. VIX sub 19. Yeah, it can move right back to 20 very quickly, though. Are they de-risking more of their 43.15? They may be. They still need to de-risk 43.25 and 50, though. So I'd imagine that those would be far more important targets for de-risking. I don't think they substantially have control of the price just yet. Since 12. That was like 12:30. Yeah, so Gamma's still pushing more negative. That tells me that there's I think we're seeing just more call selling on these upside ranges. This seems bullish. Being above the call wall's advantageous. I wouldn't say it's bullish just yet. We still have to break 43.40 to get bullish momentum. And honestly, I think here at like 43.35, what we're mostly seeing is selling at the 50, 55, and 60 strikes. Maybe even some at 45. Because this could reverse right back to the downside pretty quickly. I miss these vol swings. I have to reverse my mindset. I'm afraid of my position when my options are positive, but fearless when my position starts losing money. How long does it take to reverse this mentality? I I understand it, but it's I don't I don't know. See, like when my options are up, I'm like, ooh, money, right? And then I guess I don't really have the same fear of how the position is performing. I think eventually you become insulated to just having fear about your positions at all, whether up or down. But when something's up, you generally want to sell it. GME is not fucking moassing. It's it's up like 13 cents, man. Why would you even say that? I have no idea what Max Payne's at, but Delta Neutral's at 43.73. What if you're near the money and it printed, but you have a month of theta for downside? Sell a fucking option against it. Okay, so say I buy an SPX 4300 put, right, for like November 17th, right? And SPX drops $25 and tests 4300. And my put is now up a bunch, right? But I'm worried if I don't capture profits, it can bounce. Right? So you can just sell an option against this, right? You could sell, you could sell like a 4305. You could sell sorry. You could sell like a 4305. You could sell like a 4290. Either one of these works, right? And you could do this for like 1020, right? Or you could do it for 1019. And then you've captured some of the move, but you've kept your primary position in place. And then, if it bounces back up, you can close the sold put. And you still have a November call, but now slightly discounted due to the premium received. So there's other ways of capturing that profitability on your position, right? I think they stuffed GME FTDs and XRT. Okay. I mean, I don't think GME, the underlying, had very many FTDs at all. Because it only gets large amounts of FTDs when people buy large amounts of options, and no one's done that in a year. Have you tried this new Turbo Trader? No. WeBull's constantly coming out with useless shit that I don't test or even update. You think volatility will settle down or not in Power Hour? I mean, now that the speech is over, we should start to get a more like consistent direction. I still think they're just selling calls here. Okay, so I closed that for a profit. Actually did pretty good on that. Huh. Should do more of those in the baby account. I think what's more important here is that my Rivian bear call spreads are now up 50%, and I can close them. Cybertruck definitely looks way worse than a Rivian. Rivians don't even look that bad. I mean, they're kind of ugly, but he didn't do a sick guitar solo. I mean, we're still seeing pretty strong defense of the 4,300 level, but we could break it. We broke down to 290 earlier. That range is a little weaker now today. Let's see. I want to check that. Volatility got it kind of pushed down as probably as much as they're going to get it. Bonds are starting to creep back up a little, but there's still some pressure on vol to the downside. Dixie's down 50 BPS, so not a lot of dollar pressure. So let's say like a little weaker like long vol position. That might give him some room. I still don't see a lot of calls to the upside though. Yeah, this still kind of looks like just call selling above 350. I think my upside projected range for today is gonna stay pretty accurate. We'll see though. Calls are gonna get cheaper over the next couple hours, so we might get a shift in positioning. And if we do, they could squeeze out the sold calls that are coming into the upside right now. But the thing about the like right now is like the sold puts that were sold at the bottom to short VIX. Those are cheaper to buy back now, right? That means that someone may very soon want to go long puts as we hold this upside range. I think we have the Japanese inflation print tonight. That might have some importance, especially if it comes in hotter than projected. There's like 9 more Fed speakers today. We've got Goolsby coming up, then Barr, Bostic, Hawker, and Logan. Between now and 5:30. So quite a few of those. Tips didn't really strike any fear, I don't think. So I don't know if that really helps push the upside, but it might stabilize this range. And there's still plenty of puts at like 43.20 and all the way down to 4,300. So if we lose that call wall at 25 again, we can easily just plummet right back to 4,300. If you guys notice, that moves really fast, and that's because there's a pretty strong ramp there. So under 43.20, you kind of just like negative gamma just pushes right up into the 4,300 strike. The same's true the opposite way, right? You move up through that range really fast also. Today's been gross. I liked it. I caught a bunch of TQQQ puts on the big drop during the Powell speech, so that was fun. And I got out of my like overnight QQQ spread profitably, which I did not expect to happen. I mean, something I think that Pickle Jar is going to benefit a lot from is learning to trade resistances like this. I feel like, you know what, hold on. Let me bring this up on the big screen. Oh shit, where was that? Was that 15? Whatever. So I feel like people fuck these up a lot. Like these and these. You've got to learn to set stops. And these resistances were already there, right? So it wasn't like there was some surprise that there's a turnaround, right? Like you can plan for a continuation while protecting yourself from a reversal. And really what the fear is when people are profitable on these is that you're going to miss out on making more money, right? You're going to miss out on that continuation. But even if you set a stop at the prior resistance, right? You're pretty well protected. I mean, if this drops below here, or this, you know, bounces back above here and then reverses down, you can always buy back into the option cheaper or at the same price, right? And like, I understand like settled cash and all of that, but there's almost no excuse for not taking profits in a range like that. I mean, these are fast, but especially not when they're like a slow breakdown, right? And if you're out of settled cash, fucking just do something else for the rest of the day. Yeah, T moved up pretty nicely today. I saw that, Ivan. I mean, I think I do a pretty good job of defining like the support and resistance and the range for the day. So, you know, if you're not trading a longer dated move, right, then all of these resistances should help, right? Like they should tell you where you need to set stops, you know, where you need to consider reversals. That's all it is. I mean, it's just fucking lines and moving from one line to the next, right? And then up, fuck, and then back to the prior line, and then up two more lines, right? I mean, and all you've got to do is, you know, go long here with a stop, right? Go short here with a stop. And if it keeps going up, you get stopped out. If it fucking reverses, you make money, and then you set another stop when it gets to a resistance, right? Like, stop overcomplicating it. And trading itself is it's just a skill. It's just hitting fucking buttons the right way, right? Like, don't read so much into it. Don't sit there and go, oh, but what if I can, you know, squeeze out another, just fucking set a stop, right? The analysis and all of that goes into finding these ranges, predicting these ranges, that's not trading. No one needs to learn that shit. Like, some of the best traders I've ever met are complete fucking morons. They couldn't tell you with any degree of confidence what the market will do tomorrow. Right? But they don't give a shit. They're just going to hit buy and sell. Like everyone's like, oh, where's delta neutral and what's the skew on this? Fuck off. Just buy the option. If it goes down, sell it. If it goes up, also sell it. How do you do stops if you don't have day trades? I don't know. I've yet to master trading a PDT account by any means. I've not actually blown it up yet, but I have not gained any ground on it. I guess technically I have. I'm at like $5,000 right now, and I started with like 1,000, but I've also lost 5,000 7 times now from 10. So I really don't know what to do when you run out of fucking positions on PDT. Go fuck yourself seems to be the correct answer, because cash accounts are just strictly better for building up initial capital. Rad up 75%. It'll probably fucking run next Monday after my garbage options expire. Piece of shit. No, but seriously, you gotta remove yourself from all the micromanagement and just buy low, sell high, and you know, buy high and sell low, right? It's everyone on YouTube and Twitter will try to make it out to be like trading out to be this like super complex thing, and you need this system. All you need is discipline and decent risk management. And yeah, that's not going to help me sell any books in the future, but it's true. Yeah, you need some capital. I don't know if you need lots of initial capital, but you need some capital. I've done some amazing things with $90 in the last 3 days. These are the lessons I took to heart last year. The only time I lose money now is when I listen to JFresh. JFresh doesn't listen to JFresh. And most of the time he's just shit posting, so be careful. It's just shilling for McMillan. De-engineer. I don't need to rewrite what's already been written. That's why I don't want to do the fucking School of Stonk videos, right? Because some other asshole already recorded that. Why do I need to? If you're on a cash account starting at 1,000, what do you think you'd be at now? So since I started this account, I think my initial funding was 1,400 because it was just like what transferred over from the prior account. I have turned over like $112,000 in premium. So I would imagine that without PDT fucking me on spreads, I'd probably be above 25K by now. I'm not sure, but probably. Because you denigrate us and it's effective. I didn't mean to. I wasn't even trying to denigrate anybody there. It just comes naturally to me. I'm sorry. I think it just initially gets him over exuberant and then psychs him out. I mean, you could have the best indicator set up in the fucking world and still get burned. Like it doesn't matter, right? Even if you get burned 14% of the time, right? Like you have just fine-tuned MACD to the perfect degree for the time frame you're at, right? And you have 86% win rate. You can still lose all of your money on 14% losses if you don't have good risk management. Rumor mill, McLovin lives again. Oh shit. I need to buy some fucking puts on Upstart. Love the guy, but he's got terrible luck. Have we seen the post JPOW peak? Maybe, yeah. We'll see how the rest of the day plays out. Calls are gonna get cheaper here, and we're still pretty stable as long as we stay above 25. The clips are way better than School of Stock. Thanks, man. Thanks, Jan. I've been traveling. Can you explain using calendar spreads to hedge a jade lizard? But the lizard is alive and also stuck to your calendar. I thought he was dead and hanging from your ceiling fan. Did he finally decay enough to get flung into the side of your calendar? You could just close the calendar. Actually, that's true both metaphorically and literally. Thanks don't like to be stress tested. This is all FUD. Thanks, Mikey. I was taught to hold until 0%. It's not very profitable, though, you know? Yeah, it was platonic, Brett. Relax. My dog brought in a new one. Stop bringing your dog to work. Thank you, 100% on my put today. Take profit because I heard you say it 100 million times. Thank you so much, man. And nice. Well done. What caused yields to rocket? JPOW saying he doesn't care what the bond market price is in. I mean, it's ridiculous, right? Like, what a stupid fucking narrative that they're trying to spin up on, like, CNBC. The idea that a market as volatile as bonds could be a replacement, like right now, while those rates hold higher, sure, effectively it is quantitatively tightening, but that's what the Fed wants. The bond market ignored the Fed for a fucking year. They've just started to price in higher for longer, and now they're like, okay, so we're done, right? Like we priced this in, it's all good. It's bullshit. So then he goes, okay, we're going to pause, right? And then the fucking bond market drops the yields and equities rocket again. And we're stuck with a third iteration of the same fucking bubble. No. Who said rates aren't tight enough yet? They might not be. If you always risk 100%, then it only takes one loss. Yeah. Could you give us your honest opinion about a future GME run with all of this XRT stuff? I'm not really sure how XRT being re-thresholded affects GME. but there's going to be some spin-off there, and XRT shares outstanding are quite low. So whether it's on Reg Show or not, I mean, like, sure, that might give them more liquidity to short in the event of a run, but I don't think that's going to prevent another run, right? Like, you can't triple stamp a double stamp. And in this instance, you can't double stamp a single stamp. No, actually, it's triple stamping. Yeah, this would be triple stamping. It's kind of I think it's a similar situation to what we saw in Jan. My biggest concern with XRT being back on Reg Show is that we would see covering, but it would be over an extended period of time, like we had with defer pecs. Remember that bullshit? And you know, we got a 50% increase in stock price, but it was over like the entirety of a month, which sucked balls. The worst lesson I ever learned from you was when you held weekly out of the money calls to 0 for GME on Freg's Day. That was truly inspirational. Yep. Pretty sure I cut those. I might have held some. Some were just already 0. Like, the only way they could go was up more, right? I'm pretty sure that I had out of the money calls on Freg's Day that were instantaneously returned to $0. Like, they were 5 cents by like noon that day. Obviously, volatile bond yields will cure everything that ails our market. Sure. Do you think Tesla can bounce into the end of the day? It doesn't look good. Asking for the 100th time in 2023. Win video on trading scalping futures. None of you degenerates should be approved for a futures trading account. The best video was the Upstart take profit video in Jan or Feb. I watch it every morning as my hype video. Nice. How many millions in call interest were vaporized on Freg's Day? I don't know, it was bad. That was... I don't want to think about Freg's Day. I should have sold deep in the money cover calls. Yeah, I saw T today. It's kicking ass. I spent many months working with a psychologist and shaman to lock that lesson into my brain. When I wake up and when I go to bed, the only thought in my mind is Diamond Hand Weeklies. Dan, thank you, Kevin. Thank you. Thanks, dude. Yep, here I am. There you are. I'm approved for futures 4x. 4x isn't too bad. According to my broker, I'm a multimillionaire with $1,000 account total. That's good enough for futures, right? Yeah, actually. Here's a second chance at me naming my wife Gurk. Gur? Get this puppy to 42.75 and it's done. Could we? That's not impossible. probably just end up fucking closing at 4,300 though. Hmm. Small bounce. Mm, I think I wait. Okay. No problem, Tom Tom. Have you looked into Beyond liquidity recently? Options chain isn't stacked. The shorting's persistent into OPEX. It could. I haven't looked at the liquidity lately, but I'd imagine it's really bad. Is it still on Reg Show? Holy fuck, I got hammered today. Down 8%? This megaphone is so huge. What happens when it breaks up or down? End of day or tomorrow? $150 directional move? I don't think the size of the or the range of volatility in our current price is indicative of the future move of price action. Scalp 50 on that drop. Nice, man. Oh shit, Tom Tom, thank you so much, dude. You didn't have to do that, man. I appreciate it. Guys, give Tom Tom a shout out for hooking literally everybody on the channel up with Cornichon. That's much appreciated, dude. Thanks to your streams, I'm up 0.05% today. Winning. Thanks, Bob Lewis, Brigadier Shill. If you want one, click on the little gifting thing and turn on gifting. I think bears might be losing some steam here. Little resistance. Futures 43.30. What are you thinking, Dork? I think a little lower. Fuck, that's getting bearish as shit. You know what? One second. What did I get for the cost basis on that? Okay, that's fine. Been here since the start. Never comment, but listen every day. Thank you, Greg. Thanks, Mike. I appreciate it, man. Every time you say bullish or bearish, it does the opposite. It's hung up at resistance. And when did I say anything? I just asked Dork if it was going to get worse. It hasn't moved. QQQ's stabilizing a little bit. You think I'm just some degenerate, don't you, Dork? Listen, I turned $90 into $700 in 3 days. Have faith in the system. Go fuck yourself. I've been stuck at 700 for 3 days. You should try using the mobile. You should try using the mobile or the browser based trading platform. It really helps you lock in those gains. My office just launched their merch store, but you still won't. I know. I got stopped out at like 10:30, and I've been doing carpentry and crushing beers. What the shit's been going on? It's been a wild ride. We've been playing the J-Pow roller coaster. Have you ever traded any low market cap illiquid stocks? Yeah, where you can actually see your buys and sells affecting the price. That's why I don't. So it's a big reason. That's a big reason why I stay away from penny stocks. Slippage is awful. Your notification dings are very loud. Sorry. The volume just ripped because well, mostly because I was trying to hear the protesters. How do you think this breaks? We could just stay here the rest of the day, honestly. But hopefully lower? Let me see. Oh, it's already moving up. Well, a little bit. It's like bottomed out on the 1 minute. Give me a second. That might just get rejected. So there's some support at 4330 ES. Probably resistance to the upside at like 4347. So that should be like SPX. Yeah, like 4320. And then if this fails at like 4315, we can retest 4305. So still protecting Vega risk, but it can move lower still. We're kind of just in the middle of the the call wall. So one of the reasons for this, let me just try to explain it, and that way maybe you guys can understand. So this is kind of like the put structure, right? So we move on rejections, we can move very fast to the downside. But on buying, we can move very fast to the upside. However, the upside is protected at 4320. And the downside is a giant pile of sold fucking puts. So bulls want to protect this. Bears have a put wall here. Then to the upside of 4320, there's a call wall. So I think right now, at least for the rest of the day, or unless positioning changes dramatically, which it really hasn't for most of the day, we will continue to slide back and forth between these 2 points. If we do get a rejection lower, like below 4320, and put positioning is able to accumulate more to the downside of 4300, we could like move up and then back through 4300. Does that make sense? We can move lower, followed by the biggest green candle of the day. Yeah, followed by a rejection. And it's definitely not the biggest green candle of the day. What's up, Dork? You son of a bitch. Express isn't a penny stock anymore. That still looks like garbage. I probably wouldn't get exposure on GME unless you're gonna somehow offset the theta risk, or at least short dated exposure. Puts are kind of accumulating again. I've never owned a share of Joann's Fabrics in my life, turd. Is that true? Hold on. Okay, that's probably not true. Never mind. That's a lie. But still. I think I'm learning timing entries a bit better. Fresh off my successful scalp on a QQQ contract for $50, I think I'm fully ready to scalp 0DT SPX and lose all my money. Yeah, maybe off of like a few hundred successful scalps, right? Oh, about your penis? Absolutely not. Once a quarter, I ram my head back into that wall. 1/4 on SPX successful scalping. Are you making 100% gains on every trade that you successfully scalp? Ugh. I'm sure you've covered it today, but what's up with GME apart from the ongoing shorting? Is it possible someone's dumping their bags? I don't think so. At least not a significant number of people. I do think that a lot of retail has sold, which makes the short environment more liquid, but I don't think anyone's like actively dumping bags right now. GME is getting progressively more illiquid as the price drives down, which is usually a sign of shorting and synthetic shorting. No problem. We topped 43.50 today, so I can buy puts the next week at the top. No. Kenny would never make me hedge my bear spreads above 43.50. He's a really cool guy. So much for all the SS puts and people snagging up the float 2 to 5 shares at a time. Are you gonna roll GME tomorrow? No. They're fucking debit spreads for next week. Why would I roll them? It's like $300. If they print, they print. If they don't, I don't give a fuck. Did you rant about trading skills? It's so true. You can literally buy puts or calls randomly with super tight stops and just move them up when you guess right. Consistent money. Yeah, I mean, if you know how to manage risk, you'll make money generally. It helps to be really good at taking profit at the right levels also, but Jim Jordan will not try for a third vote for House Speaker, interim Speaker empowered. Washington Post. Okay. Yeah, I'm beginning to think that Kenny guy wasn't that bad. Think of it this way, without him, nobody would have ever made any money on GME. Well, at least after 2021. Did you draw an invisible support line there at 4305? No. I guess on futures. There's a line there, but not on ES. Or SPX rather. I'm beginning to see why your baby account has stunted growth. Yeah. I have a blind monkey that throws its poo at the wall with a big red line going down the center. Left side is puts, right side is calls. 60% of the time it works every time. Perfect. It's too risky to buy a put without the shares? Why? What? You know you can't be assigned on a long put, right? Pi is the perfect show. We've gotten so full circle from yeah GameStop to yeah Kenny. Well played. The people needed a hero, and Ryan Cohn wasn't living up to it. Bulls are kind of fuck. Yeah, I mostly agree. As indicated by that position I sent you earlier. Anyone who thinks it's too risky to buy a put without owning shares is likely right. They shouldn't own puts. Let's be honest, most of you shouldn't be trading options yet, but here we are. Oh, it's not a popcorn trader level YOLO, dork. It's got theta. 6 days of it, but still, well, 9, 8 days. I saw the allocation. I don't have a choice. Gherk, most of you shouldn't trade options. Also, Gherk, come on, options. I mean, it's what I do, right? I'm just trading options because I'm too lazy to go to the casino and gamble and lose money. I'm embarrassed of the time I spent on SS. You're not alone. I'll never give up my options trading approval. TDA was very happy to let me do whatever I want. Level 5, baby. When Netflix elite puts? Not yet. Are you working on a secret project to make Dork's port big enough he can afford to move closer to New York so you can all hang out? I'm just working on making my port big enough that I can buy a house next to Dork, and then me and Dork can hang out whenever we want. And that house is going to be in JFresh's backyard, and it's going to be pink. Selling options is the best ever. It's a thing. Gork doesn't even help Dork. That's not true. I just laughed at one of his positions. And he gives... Yeah, you buy that shit and you give me a hard time. How did you know I'm squatting at JFresh's backyard? He told me. Yeah, but you have a 30% allocation in a company with no... With no actual news or even a solid earnings report. And I have a 80% allocation into something that seems pretty well defined by the current options positioning. But Gork MOASS. JFresh is here, probably. He's probably hiding somewhere. That's a penis. I told JFresh the other night, he's like one of those, he's like that kid from Superbad who's constantly drawing dicks all over everything, but like AI has rekindled that passion in him. Does anyone know what DFV's up to nowadays? Probably enjoying being rich and selling covered calls to suppress GME's price. Pump to 43.50 in pre-market tomorrow to save their AM expiry calls. I would not be surprised. What are your thoughts on SPX over the next week or so? OPEC's up, or will it result in a sell-off? We'll see what Charm looks like tomorrow. Dealer positioning. But right now, I think it doesn't look very good. Things look like they're turning more bearish. And they're already really bearish, so... DFV said he's not a long-term holder. He probably sold long ago. I thought the opposite of that was true. Oh, Jesus Christ, Thunder. Are we going to have another Lily moment next week when OPEX turns into NOPEX? He's probably yielding so fucking much selling calls to the baggies. Yeah, yeah. The yields still aren't that bad. I mean, annualized, even this year, which has been shit, I think it's going to come in. Well, if it continues at this rate and IV doesn't like halve again, like 46%. If Jimmy craters, it just inflates your annualized percentage. Not if IV drops. Now, if GME craters and IV spikes, that's another story. Remember when you said GME puts weren't worth it? They're really not. You have to buy them like in the money. And it kind of just blows because the IV just gets chewed up. That's why cover calls are better. Cover calls, debit spreads, or credit spreads. Well, debit spreads too. You could do bear put spreads. Those are more effective. You can do in the money puts. Those aren't that bad. Yeah. But you gotta dodge that IV crush somehow. Otherwise you get fucked. I'm gonna buy in the money puts now. You're gonna get wrecked. My account is stuck at 18,000. Every time I make something, I end up losing it. Work on your consistency. They keep teasing 4,300. Well, accumulation in this range isn't exactly beneficial for the bulls, right? What's the positioning looking like? Looking to re-enter some downside piece of shit I got stopped out of when I was sleeping today. I don't think it's really changed much. We're still kind of just stuck between short puts at 4,300 and long puts at 4,320. It doesn't seem like all that much is changing. Just chop. Out of the money puts are starting to decay. So we're losing the potential to push further down. What is the Tesla support that we need to break under? The next one to the downside? 214.95. Right now we're just sitting on like the long-term trend. So yeah, I guess we want to see this break more substantially, but yeah, we want to see a move down to like 215 basically. Actually, that's moved, I think. Maybe 212. 212 would be better. They better push for something, Dork, because they're running out of time. I'm not playing the bear song if we break 4,300 again. It wasn't a Fed meeting, it was just a speech. JPAS said the bulls are full of shit, their narrative's stupid, and that they'll raise rates if they need to. I think somebody just bought one put on the SPX. Oh, which one's this?
Another white cop point, a song stuck in the road. Fate grabs you by the wrist, directs you where to go. It's something unpredictable, but in the end it's right. I hope you gave Kirk access to your wife.
Yes, that's mine. It was, Turd. Well, you didn't write it, but you suggested it. And then it was made based on your suggestion. Did JPAC get evacuated to a safe place at the end of the speech? I hope so. Those protesters looked vicious. They were very angry about the climate at a monetary policy luncheon. I feel like they just like they protested the wrong event. Assume that any benefit not specifically described in the membership agreements is for pontiffs. Username, accusername, face. 4,200 or 4,400. But the fucking bulls are fucked, man. Although I did enjoy my like 2 days of bullishness. That was fun. Imagine calling the president of the Fed Jay. Does the ES get a trophy for riding your bear test line for more than 8 seconds before falling off? I guess. As if everyone was going to stop and go, you know what, you're right. Let's just stop everything and fix the climate right now. No. I'm going to spend all of my allotted pontiff time trying to get you to go cow tipping with me. Ew. I don't like that. It's a pretty good source. Hard to cite, though, dork. Like, I'm not sure the bearishness would pass academic scrutiny, but I do agree from an observational stance, you're 100% correct. A running cow will fuck you up. Yeah, that's what I don't like about it. I don't fuck with animals that are bigger than me. Quote, I don't like the idea of hurting another living being. Former UFC fighter. Cows are smaller than centaurs. Cows aren't smaller than horses. Do you believe the closing price will be a shock to us all? Not really. Have you seen a Clydesdale? Yes. Cows are smaller than horses. Source, I live in Indiana. Maybe you just have little cows. Or gigantic horses. Bulls can be massive. Imagine getting hit by a Fiat 500 with horns. Fuck that. I'm gonna Christopher Reeve myself. I mean, I know I spend all day in a chair, but I like having the option open. From Roaring Kitty, Investment Style Part 1 of 2 Overview. My holding period ranges from 3 to 24 months. Is that helpful for anybody? The point I'm trying to convey there, yeah, I get it. I get what you're saying. He probably sold, but the yield potential would have been discouraging. I mean, back around the time people presumed that he would have sold, yields on weekly GME calls were like 12 to 15%. Is this going to have some momentum? Well, we have a little bit of momentum to 42.90, and then if we break 42.90, we have a little bit more momentum to 42.75. After 42.75, the only way we're moving down from there is like on the back of longer dated positioning. Speaking of which, dork, I'm beating the S&P 500. I like it. Let's keep doing more of that. I probably bought so many of DFV's weeklies in 2021. The fucking options premiums were ridiculous. And I like when I say 20% yields, I'm talking about like 0.1, 0.2 delta shit. After your last discussion about setting stops on hitting resistances, I didn't. Excellent. I haven't checked in on GME in quite some time. Did we ever lock the float? It's kind of going the other way now. Yeah, people were screaming about that. JFresh told them they were wrong, and he was ultimately right. World's heaviest bull, 3,920 pounds. World's heaviest horse, 3,359 pounds. World heaviest bear, 2,200 pounds. Herbivores tend to be larger. Small brains, big bodies. Why are the forward yields on MBB and TLT under 4%? Shouldn't these reflect the treasury market? Why are they mispriced? Where's the arbitrage? You're talking about the dividend yield, right? I think it's based on the totality of their current holdings, right? So, I mean, TLTs didn't just start buying 20 years at market currently. And so the aggregate yield of their portfolio is lower than the current market price. I mean, the arbitrage would just be buy 20-year treasuries. You'll see what I do is I buy 20-year treasuries, and then I use the margin from that to buy 2025 long positions on TLT. Except people are just shorting both the TLT and the 20-year treasury. Thank you, Carl. Would you sell put spreads down here? Fuck no. Dork, I've now outperformed the SPX for this year in the last 3 hours. 2 hours? When did I first buy it? Hold on. I don't remember. One hour. Speed record. The hard part will be keeping it open. It's only a 90%. Hold up. It's only a 90% allocation. That's 10% left to rebuild the account on, though, Dork. Think of it that way. Oh, Jesus fucking Christ, turd. What is wrong with these idiots? Like, when the fuck did collective bargaining on extinguished shares begin? No one did this shit with Revlon. Everyone was like, ah, fuck, my shares are blown up. We didn't need a whole conspiracy theory. What are you 90% in right now? So I'm playing this game with this this other account with Dork, but TQQ $34 puts for next Friday. They're currently up 23.23% from where I bought them. The game with me is called Make Dork Want to Murder Me over and over again. I'm showing you the ways. There's people in here that would pay thousands and thousands of dollars to see the true face of my degeneracy, Dork. And you're getting it free. I sent you an even better screen cap. That shit's just depressing, man. Oh, Jesus Christ. What a fucking dipshit. Port back to $90 tomorrow. Well, then we'll try a different strat, right? Just tuned in. Love the stream card. Thanks, Stewie. So, Turd, is J-Roll trying to explain to all of his paid subscribers why he's selling them dealer gamma exposure as a moving average, or is he trying to explain why their shares aren't extinguished? Good, he's a fucking moron. He's a fraud. Tom Lee in shambles. God, I'd hate to be him at the end of this year. I'm blocked and I can't listen. I'm sorry, Turd. It's all part of the triple oscillating boom trigger, Gurk. Just be patient. Remember when he was trying to pitch Animoy to everyone? What a fucking shill. Now Peruvian Bull's picking stocks. He can't even write a coherent fucking paper. And then he's taken that incoherent fucking mess and published it as a book. These people are disgusting. I fucking hate finfluencers. This is why ACT scores are falling. It's okay, Dork. We're up 30% now. Also, consider the other angle. Volatility decay, right? It's like a built-in hedge. Even everything is garbage. Is it possible the last 2 days are just SLD playing out in the early part and recovery pumps coming back tomorrow? Or are they big fucked? The market looks like dog shit right now. I don't know how to put it more I don't know how to put it nicely. It's just shit. It's a big steaming pile of wet shit left in the sun and you stepped in it. And you're wearing hiking shoes. Hot lettuce. Yeah, perfect, Bob. No, it won't dry out because it's not hydrated, it's just greasy. Odorous Dan. The market is chopped cheese. We're currently at the highest level VIX has seen since May. I take 85% of my vol plays and wait for a reset, or go full diamond hand Jan expiry. You think this is gonna slow down? I don't know, man. That's a lot of weeks up on VIX futures in a row. Did we go higher last Friday? Yeah, but it wasn't volume backed. So we need to go up 5 more cents. Oh, there it is. We just broke it. Now I'm right. $20.90? Where the fuck is $20.90? You're looking at, I'm looking at VIX futures. You're looking at VIX. High for VIX futures at the beginning of October was $20.35. I just sent you some god tier TA. Oh, gross. Go publish it on Superstock. We should stabilize somewhere around here unless we get more put buying into the end of the day. Or we'll get capitulation and bounce back to 4,300. But yeah, this is kind of the low end of the options interest right now. Well, what price are we at? 280? I guess we have like five more dollars. But there's sold puts there. They're not gonna want to give that level up too, right? Or maybe they don't have a choice. 4275 has longer dated sold puts. There's Vega risk. I don't follow futures ever since you told us that they're not actually from the future. 320% on a 0 DTA. I played from your DD this AM. Thank you. Nice, man. Well done. Congrats, C. I'm up 140% now on December 260 Tesla put. How to weigh greed versus gains at this point? You can always, like, if you think it's gonna bounce, you can sell a shorter dated put against your position to capture your profits. Or you can just close it. It's up to you. Alright? You don't need to balance it. You can just take profits and then reposition. Like, you've probably already made more on it than you thought you ever would have, right? So, but you're very deep in the money. You're pretty well protected. You could manage the position further, or just close it. There's no stress if you close it. Oof. It's getting real fucked up, isn't it, Dork? Jesus Christ. 5 years at 5.1%, and the 10 years about to break 5%. This chart, Bob? The one I'm looking at right now. The yields are trying to run away from the volatility, but the volatility's chasing it down. No problem, Frank. I don't have anything new on deck. Let me think. Exploring General Equilibrium by Fisher Black. The Twitter post explains it all. It's very concise. Is there an easy way to delete expired options in your recently viewed tab on WeBull? I have no idea. When would you consider selling in the money CCs on your position? Which position? I've already sold some in the money CCs on a few positions. Is Netflix tasty for some medium-dated puts due to this earnings bump? It could be, but I'm waiting for the call interest to settle down and short calls to start moving in. They'll start today because the market's doing so poorly. Bulls are super fuck. Yep. Ooh, just got a little worse. 250 today? That would be crazy. We're already like right at the higher confidence projected range. 250 would be nuts. That'd be a big swing. That's what, 100 and... Well, I guess VIX is high enough. VIX 21, so it's like, what, 1.35 BPS? End of day guess? Not sure. I think they fight for the Vega risk at 75, but they're having some problems with yields here. Dixie's also bouncing back up, which is pressuring vol. Hey, on the Dill stream, when you said you had some cool new stuff for us, does this mean you're bringing back School of Stock? No, but it might be better. Oh shit, adopted by the Dans. Thank you so much, man. Guys, give Adopted by the Dans a shout out for hooking you up with Cornish on. I appreciate it, dude. I didn't even see that. I don't know why it didn't pop up here. That's weird. Why the fuck is it not? Alright. Well, it shows up on the other thing. You're starting a podcast where you bring on financial streamers as guests and just expose them for being frauds. They expose themselves as frauds every day. It's not like their veil is isn't transparent, right? Like they just say stupid shit and everything they post is like clickbait fucking nonsense with zero diligence done. Like, I get it, you're not a financial advisor, right? But you should still be providing, like, information and data that is of value. So people can make informed decisions instead of just trying to get more clicks and subscribers. Stop buying calls, Washington Beef. Could SPY hit 420 by October 31st? It's not impossible. What's this compassion and ethics of which you speak? I don't know. That's not how social media works, Dad. Only the masturbators succeed. Well, then me and JFresh will continue our lambasting of misinformation and bullshit. And people will be like, oh no, why is he attacking my favorite person? It is Power Hour. The 10-2 just blasted off. 10's up a lot. If this is gonna pop, they'll crush yields alongside it. James Rowland's a noble scam artist, and you're just a hater. Whatever. Nothing beats that fool that threw shade at you because you were too advanced for him. I thought that one was pretty funny. I left it alone because I felt like he said far more than I could have ever responded with. Who just roasted himself. Yeah. I took profits here. Thanks for drilling it into our heads. Don't care if it goes down more. Nice, man. The most empathetic I ever saw you was when you co-streamed that American flag face dude. The pity you had for this dude was all over your face and how irrational he was. I don't know. I don't really care about the popularity contest, but it really pisses me off when there's like people out there like me and JFresh and Dork and Turd and, you know, other guys that have kind of stopped, but that really do try to provide retail with like actionable and well-researched information, right? Like really try to give retail a leg up in a market where everything is working against them. And then you have people that are just promoting like conspiracy and bullshit for the sake of their own bank accounts. And fuck them. Fuck those people. They are actually scum. All of them. Looking back at those guest stream appearances were all pretty cringe, but I found you through your appearance on Houston Wade, so thankful you did a few of them. I'd do more, but I would honestly, I would do more, because if nothing else, it shows people that the person, like, even if they never follow me or even interested in this shit, it shows people kind of how uninformed the person that they're getting information from is. That was Roland. Yeah, the fucking plagiarist. He plagiarized my DD on Super Stonk for like an entire fucking year. I think he got banned from there, and then he went and like posted a bunch of shit to get attention on Wall Street Bets, and I'm pretty sure he got banned from there. And then he turned to the AMC and BBYRQ crowds, and I'm sure he'll get lambasted by them as well, because he doesn't know what the fuck he's doing. I still have like an email from him where he's like, "Oh my god, I learned everything I know about the markets from you. You're so cool, man. I didn't mean to plagiarize you. My friend did it. It totally wasn't me, mom." Like, and he's charging people like obscene fees for his fucking analysis, but he's not qualified, right? And don't get me wrong, there's a lot of people out there that can do analysis that aren't like certified professionals, right? But it's I mean, half of his fucking picks are just Pickles picks because he's probably a fucking billionaire. And then the rest are like meme stock bullshit based on dealer gamma exposure, which is all that Voex is. Voex is like $100 a month monthly subscription, so you can see dealer positioning from his private set of fucking data, right? Which is just calculations done on CBOE data, right? And it's done once a day, so he's not even paying that much for the actual data he's providing. And then it's like it's fucking dealer gamma exposure. And then he's dividing it by something, volume or fucking whatever nonsense to create a moving average, right? And then he's like, "Oh my god, gamma exposure is negative, it's gonna squeeze down." Like, that's not fucking insightful. And people are paying hundreds of dollars a month to get that fucking bullshit newsletter. Which and all of it is just it's just free data passed through a filter and handed off to the public. That's money people could be gambling on zero DTEs, dork. Real money that they worked for. To get fed bias confirming bullshit and lies. Pickle Jar members are paying $100 a month to shitpost and pigeon whale chat, but I don't fucking lie about it. It's more profitable to be a scammer than an actual trader. It's really not, right? Because the scam thing doesn't work. It's not, there's no longevity. Like, you can only scam people for a little bit of time, and then people are like, that guy's full of shit, right? And then you can't scam people anymore. Eventually, once enough people follow you, they will realize that you're full of shit, right? And then you no longer have a career doing that anymore. Like, Elliott Wave guy is selling people analysis, and the guy was a YouTube, like, prank, like, he had, like, a YouTube prank channel before he learned fucking Elliott Wave. Like, get the fuck out of here. I tell everyone that'll listen, what you have done for the retail investor has never been done before. It's unprecedented. Retail has a quant team. Thank you. Thanks, Skier. That's the thing. Selling Elliott Wave analysis is his biggest prank yet. No shit. In light of your rant, why are you scamming me? Happy 25 months of me procrastinating and clicking a button to downgrade. Elliott Wave's rule, you're a shill. I love you. Thanks, Dave. I appreciate it, man. Girk is full of fudge. He guilts me into pigeon whale every month. Says I'm not a true American if I don't run up my credit card debt. Someone's got to crash this fucking market. You bought puts, right? Get to it. I'm starting my own Finfluencer subscription based on a new type of TA called Gherkin Wave Analysis. It's just Pickles picks, but a week late. Success rate will be insane. Lots and lots of complaints in Discord today about people having stops gapped over and over and over. This is normal in extreme volatility markets, right? Yep, you got to take more risk. It's the way it is. Those stops need to widen alongside the volatility. Because spreads sure as hell will. Are my 4250p for tomorrow gonna print? I don't know. Did they not already? Are you not already up? You're asking if they're gonna go in the money? I don't know. Or did you just buy them? Did you buy them on the bottom? Don't lie to me. I like when Greek had Jamie something on and wanted to talk market mechanics, and Jamie just started babbling sentimental stuff. He lost Girk at that moment. Well, in the early days, I still held out hope that there were some people that were just like focused on other shit, right? But they weren't full of shit. That kind of faded. Boom Hunter is just RSI with two moving averages. It's like a fast and a slow. So it looks like it's predictive, but it's not. Where's GME and the Wyckoff distribution? Still distributing back to a fair value. Big ol' Bruce is not full of it, but man, he likes to shill his courses. Yeah, I mean, he understands fundamental analysis, and his picks aren't terrible. It's he has some weird choices, but I don't think he's unknowledgeable. It's more than just like he doesn't he's guarded with what he knows, right? Which is what you'll see from most professionals. Like if you actually have professionals who have like YouTube channels and stuff, they'll be pretty vague about everything. You're trained to do that with clients anyway, so it's just a natural presentation for them. Officer Doofy, welcome to Zillionaire. Thank you so much, man. Hit me up on the Discord. I'll get you added after the stream, dude. So this isn't the Elliott Wave channel. Now I understand why I keep blowing my port with 100 BPS 0 DT. Might as well stick around, Pickle Man. Maybe one day you won't be a disappointment, McChuggets. I mean, it's fine, right? Like a good recession will fucking wipe out most of the current finfluencers. Because they'll just keep trying to go long shit and people will lose money. But the problem is people are gonna lose a lot of money. Can't tell you how badly I want to overtrade into close. Talk me out of it. Hmm. Can I? I, I don't know if I'm qualified here. Dork. 10x, baby. A support card. Colin, it's very hard to hide my malding. GDI, I'm gonna give back these gains, aren't I? Thanks for nothing, shill. I mean, I'm fighting off my desire to buy 4290 calls as well. So we're in the same boat, man. I don't you want me to be the captain? It's not gonna work. I don't know anything about nautical law. How much money, senor? Oh, I turned a $90 account and the current balance is now 907 in the last 3 days. Maritime law, whatever. Remember we were talking about Jimmy going above a certain level, let's say 30, never coming back down, the pivot to ecom and profitability. Nice days. Would have been cool if Cohen did that, wouldn't it? Instead of abandoning e-commerce and focusing on his shitty stores. They're gonna lose 4280 here? Not necessarily, but they're still defending 75. So that makes some profit taking more likely. Although we did already have one round of profit taking that didn't really yield any positive upside move, right? Right here. And so there may be a little bit more confidence in trying to push down one more time before the end of the day. The puts are there, and the vol's high enough, right? They could. They just need to be a little bit more emboldened. Wow, another month of paying this shill. I wouldn't have it any other way. I made 2K today. It could have been like 15 if I didn't sell early. Oh well, always tomorrow, like you say. Much love, Hercules. Thanks, man. Tim, sup, Gert? Just got back from an hour-and-a-half meeting. Glad to see you clowns have been having fun crashing the market while I was out. Thanks for all you do. You got it, man. Thank you. Customer service is the best of any business I've shopped at. In my opinion, who gives a fuck? I don't care if the customer service is good if you're not making any money. I'm still gonna buy shit on Amazon because they deliver it to my fucking house and I don't have to drive there. How resistant do you see the oil, coal to a market downturn given the eventual turn to commodities? It may be somewhat resistant, but it's not going to be completely resistant. So expect Plan to be able to lower cost basis in the event that there is an adverse event. You should be prepared for prices on equities to drop. If there's a true crash, nothing's going to like trade flat through it, right? Customer service will shoot you if they catch you shoplifting. Nothing like good press during a period of heightened civil tension. He's probably a super stonker. He was like, no, you're not taking my fucking margins. See you tomorrow. Time to take these profits and buy some Halloween costumes. Have a good night, Danarchy. How do I get Pickles picks? They're billionaires. What scenario to play out for you to be green on your positions? I feel like every day I look, you're red. I sold the green ones. That's what happens. This is just shit that gets left over. Or that I can't close because I'm out of day trades. Do you generally keep your green positions open? What did I have this morning? I had SPX, Bull Call, and QQQ Bear Put. Both of those printed. I miss you, Pepino. No one should be sad about GME. I once farted during sexy time. I wasn't sure if I browned or released a shiny nugget. When I turned on the lights, I realized I dropped a stinky blueberry. Moral of the story is shit always happens. One love. Thank you, Kendra. Kendra never FTDs. Accurate. Uber Kills turned me on to BTI yesterday. Currently at 10% forward yield. I'm gonna full port if if the market crashes. Nothing like just over leveraging yourself into one position during an economic downturn. That couldn't possibly carry any risk. I'd use my monthly membership message, but I'm saving it for tomorrow. Everyone does this when they make money, so here you go. I'm tempted to buy a call here. Thanks, Kirk. I'd be careful with it. We're getting closer and closer to 75 here. The Bears may still have control, and they're starting to buy options out into tomorrow too. So, it may not bounce, but it could. We got what, 33 minutes left? I'd be more concerned about a bounce if we break 75. Yeah, this is where I could see a bounce being more likely. Because then you get profit taking on the 0 DTE 75s that are still out of the money. Wow, is Jimmy dead? kind of turned around here at the end of the day, right? It's getting shorted really, really hard. I contacted King's Hawaiian Bread Company about acquiring HE. I feel that move could bring some much needed positive publicity. It's a natural fit. Dough plus wildfires equals bread. No response. Wow. I guess they didn't want an island-sized bakery. Too soon? Yeah. Surface Smurf will get pissed about it. Gold bounce looking strong. So far, yeah. I still have some long gold for Jan. Good morning, Taco Night. Trash Dan. How you doing? Yeah, because no one is seeing the actual struggle people are going through on Maui. Get fucked. People are going through struggle all over the world, man. I'm going to spend all my time worrying about it. Sometimes bringing levity to a situation can draw attention to it while also reducing pain. So you get fucked. Blow it out your ass. I started paper trading the past few months. So far, I'm down 150,000 on AMC. Bullish. Well, at least it wasn't real money. No, Regshow doesn't prevent it. It encourages it. Ooh, trying for some bouncies. I do not own any more GME shares. Such a relief. Wait, hold on. Didn't you buy some earlier today? So you just sold everything you bought at a loss? Clipping for the spank bank. The mechanics of what? I sold them all for a $520 loss. All right. Watch it rip to 25. Brett was the trigger. Is 4,400 off the table? I don't think we're getting anywhere near there anytime soon. I probably shouldn't have bought a handful of 4300C, but I sure would like to see them pump this now that I have. Fair. When was the trigger for buying them? I posted it last night. Greg. You know where I put that? You know where I put that line that said in the DD last night that said bear test, and then that other line that said bear confirm? Those are the lines. It was here and here. So if you bought a put on the test and sold it on the confirm, money. This is true most days. That's what those are for. Do you see CAT continuing its descent over the next week? It might bounce after the dividend. Dividend's tomorrow, I think. Yeah. No one was complaining. I just went on a rant. Apparently I missed it. People are complaining, so just to say thanks, I made a bunch of money this week. SLD is great. XOXO. Nice, Evans. Well done. I'm glad to hear you're back in it. Or wait, did you take a break? Or maybe that was someone else. In terms of value, what I'm actually referring to isn't getting talked about. Like the state saying they may just take control of the land and turn it into condos for developers, stealing land from families. Okay, I hadn't heard about that. That sounds fucked up. Do they own the land? That seems hard to do. Are they going to use like... Is it because all the infrastructure is burned up and they can't afford to rebuild it? My favorite meme of the day, women use these aggressive vibrators and wonder why all their kids are born stuttering. Their resistance levels. Why would you buy on the confirm? Because risk is scary. That's why you set a stop. Bips, that is all. Because I'm dumb. I mean, you could buy like on the confirm, that's where you'd want to buy like longer dated, right? Because now you're pushing into a new range. So, you know, you're like the confirm level is like that's where you're confirming the bearish trend, right? So at the test, you're speculating on a continuation of the bearish trend. At the confirm and beyond, you're confirming that trend. So, I mean, generally speaking, you would buy like at the test with tight risk management and appropriate allocation. And then, you would wait to confirm downside, and at the confirm you could add to that prior already profitable position. What's the date for October OPEX? It's literally the same thing every time. It's OPEX T+2. OPEX is tomorrow, and then T+2 is settlement from tomorrow. So that's through Wednesday morning. John, you've been here for fucking more than a year. You should know this shit already. $12 minutes to power 10 minutes. Yeah, it could be a little bit of upside, but it could also get crushed. There's a lot of put interest at the money tomorrow. This is tough. I would say it's probably intelligent not to play either the direction, but the market maker would prefer that this end the day a little higher than it currently is. So but that doesn't mean they're going to stop making the market where there's demand, right? So as long as puts continue to come in for tomorrow, we could continue to push down. I would watch out for profit taking on another test of 75 though, especially if the 75s go in the money. That could lead to profit taking. But I wouldn't go so far out of the money as like 4,300. Dave. How can people who's smart enough to open a trading or even YouTube account not figure out when the third Friday is? I don't know. Puts do cost same like shares. Arguing with friends about chopped cheese. I need you to weigh in, Gherk. They're shit, Sisyphus. Don't you usually buy stuff for the following OPEX to play this OPEX? Yeah. But now more people have margin accounts, so we can just do spreads. Like responsible degenerates. I've been waiting to play. I've been playing Zero DT like Cash Cab, where I risk my profits at the end of the day on the video bonus question. It generally has not worked in my favor. Those plays are very high risk, high reward, right? So you generally would only want to allocate like a very small amount of capital to them. Like yesterday when I played the 4300s. Like you don't want to put a ton of money into them. What's the difference between chopped cheese and a cheesesteak? One is ground beef, the other is ribeye. Should be. One One has fried onion. The other has raw onion, lettuce, and tomato, all of which are wilted by the hot steam that comes off of it. They're not the same. One's a deconstructed cheeseburger. The other is a steak sandwich. Yeah, it's a long cheeseburger. It's fucking so gross. What if they put frozen lettuce to counteract the steaming? Do you know what happens when you freeze lettuce, Bob? You know what happens when ice crystals form in plant cells? Well, it doesn't just get cold. They should give you a little ramekin of lettuce. No, they just need to fucking serve it open-faced with the cold ingredients on one side, the hot ingredients on the other, until they reach an equivalent temperature, at which point you can close the sandwich. Or just give you the fucking lettuce, tomato. It doesn't matter. It's a cheese steak. It's like, it's a fucking cheeseburger in a hoagie roll. It's pointless and dumb. And it tastes like shit. It's like a grainy cheeseburger where all the meat is well done. The chopped cheese is like if you went to some place and they're like, "Oh, excuse me, sir, would you like me to smash your fucking cheeseburger into a pile of shit and stuff it in a different type of bread?" And you were like, "Yes, that's what I want." Dork. 11x, baby. 11x on what? I bought a degenerate number of, well, it's not really a degenerate number, but positionally for the account, a degenerate number of TQQQ $34 puts for next week earlier. And Dork was like, "You're a regard," and it's just done nothing but print. Have you considered taking profit on this? I don't think I can. I actually would if I could. Pretty sure I've used up all my day trades. Ooh, I have a day trade. Oh, don't tell Dork. I could actually take profits on them. Fuck. Shh. They're for next Friday. They're only up 50%. Oh, they are not bought with cash. Don't you dare trash. All right, so some 0DT 75s taking some profits. A little bit of a VIX drop here at the test of 21. Let's see what tomorrow's expiration looks like. Oh, wait, I don't even need to do that. Tomorrow's expiration still looks bearish as fuck. Dear God, all of the call interest is gone. And there's a giant pile of puts at 42.50. And 75. Yeah, bounces here may not be so hot in the next 12 minutes. Might get 80 back. Hey, overnight's a whole nother story. Yeah, just because there's strong positioning to the downside doesn't mean it won't move up overnight. I would still carry a hedge. Or at least hedge like a bounce back to where Vega risk is at like 43. How's tomorrow look? Pretty fucking bad. So you sold the 21 and that's what makes it a debit spread. That's how you make a debit spread. You buy a near the money call or put, and then you sell a further out of the money call or put. Boom, debit spread. And so the decay of the sold contract offsets the decay of the longer one. And the premium you receive discounts it. Jono, welcome to Zillionaire. Thank you so much. So lower capital allocation, less theta exposure, but limited upside potential. Or downside potential, depending on which way you go. What's the expectation for Japan's numbers? Right now they're projected to come in lower. Inflation's supposed to drop, so is their core. And their rate ex food and energy is supposed to come down. But we'll see if that holds true, especially in the higher energy. Japan is extremely reliant on foreign energy. So, they have basically no natural resources. So the higher energy costs could seriously affect their inflation. Another great day. Thanks for all the DD and Pickles picks. I can't wait for tomorrow. No problem, Jitsi. Congratulations. An anime waifu is not a natural resource, Sistani. I don't know. Do you think gold will keep pumping? I hope so. I have calls. Fucking A, popcorn trader made money? That's awesome. That's how I know when I've really won for the day. Popcorn. You're my barometer. If you can make money, no one else has an excuse. That way I know if people are just whining or if it was really a shit day. I'll take it as a compliment, even though it's an insult. It isn't. I have two like honing rods in the Discord. You're one. What would the absolute degenerate do? And then Don Duck is the other. Because I ask myself, what would a complete moron do? And then once I have both of those measurements, I can make a balanced decision. Is Don Duck the new walk-in? He's the old walk-in. He's just... It depends on how pissed off at him I get in the overnight session. I only deal with him during Globex hours, though. What about days where Popcorn and Don Duck make money, but the rest of us don't? You should have... How? That day should never exist. I wonder how that guy who said he went short gold yesterday is doing. I don't know. Did someone go short gold yesterday? Why would someone go short gold? We're in the middle of like a credit and currency crisis. Banks need that gold. It doesn't matter. Boomers are irrelevant in the gold market right now. Banks need gold. They say they don't, but they do. You said okay. That sounds like something I would say. Was it really sarcastic? Did I lay it on thick? Palantir has gold. Yeah, but he's a moron. Are you pleasantly surprised by volatility today? It's in line with expectations. You sound like Peter Schiff. Gold, 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 gold. There's times to buy it, and there's times to ignore Peter Schiff. I have GLD. I have some gold futures, but they'll probably never print. I guess if gold hits new all-time highs, they would, but... I can't trade all of Monday. Crash imminent. Both 42.50, 43.50 tomorrow. PS, are $85 Zom Leap CCs too greedy? Sold at 120. 85 might be a bit far out of the money. How long? Like what kind of time frame are you talking? I'd assume that you just buy them back when you're up on the delta, right? When are you picking up FXY leaps? I have yen futures, so never. What's up, Kirk Barry here? You see you tomorrow? See you tomorrow, Barry. Can we hit 42.25 tomorrow? Or because there's not really any data, should tomorrow be bullish? We could definitely move lower tomorrow. I mean, honestly, like, had there been no data today, we probably would have moved down faster. There's some data tomorrow, though. I don't think it's completely devoid. There's, Great Britain retail sales. And then, two Fed speakers, one in the pre-market and one in the midday. And then at 4 o'clock tomorrow, we have the financial stability report after market close. Monday is also really light on data, but that could just like light data could just reinforce the bearishness of today, right? So generally speaking, like from a macro trading perspective, periods of really light data tend to just continue the trend the prior data created, right? Stream the report at 4 o'clock. Okay. Chances of Fubo diluting. Fubo's been, I think, actively diluting all along. U.S. Navy destroyer intercepted multiple projectiles, including drones, that were fired at it near the coast of Yemen. Huh. Source? They later said not fired at the ship, fired towards Israel. Zero Hedge is not a source. I know I'm not. Two PM margin call guy isn't reliable. That fucking Twitter is horseshit. It's just like Squawk feed or whatever it is. And he just reposts it and then adds his commentary. Most of like all the Twitter fucking, they just subscribe to like a $14 service that provides them with like market news data, and then they have that set up to automatically post tweets. Ding ding, the day is done. Well, that was a pleasant lack of a real bounce into the end of the day. I mean, I guess we tested 80, which was kind of the upside range there. But let's see. Futures looks like it's continuing down, and we're starting to lose the 4,300 level, which is very important. Continued downside from here. I mean, I would say that a test of our long-term trend at like 42.75 is becoming quite likely. That's our previous low that we bounced off of on the second test back here in early October, and what launched this period of risk off. And so now we're falling back to that. This will be our third test in the course of this month of that low resistance from October 2022. Fitting that we should now fall below it. And I think the chances of us falling below it are decent right now. So we are well set up for that test, and bears are positioning pretty aggressively. I think there's a good chance that we see it. VIX closed above 20 for the first time, and fuck, it's been months. Dixie moved up a little bit today from its lows, but still closed the day down 34 basis points. The top end of the yield curve still sliding up. Correlation picking up and moving towards the end of September highs on the 1 month. Actually break even with the September high on on the daily, sorry. And I believe 3-month correlation is already surpassed. Yeah, 3-month correlation has already surpassed the highs from August and September. The vol curve versus forward yield of the VIX has moved. The forward yield of VIX has moved positive now. So now volatility demand to hedge convexity in long bond portfolios is higher. The more positive vol moves over that, the more demand that will create on long volatility. This is reflexive. That can continue to drive either yields up or long volatility demand up. Either way, bearish, right? So if yields continue to rise, vol will continue to rise. If yields come down, markets will come down, right? Because like people will be taking money from equities into bonds. As you can see here, our yields are quite high at the close today. Could probably go back on the weekly, and it might be hard to find an equivalent. Yeah, we're roughly like the 10 years roughly at its high from 2007. The 20 years the highest it's ever been. And the 30 year is well at its most recent high, and I think also 2000 highest level since 2007 also, so preceding the 2008 financial crisis. Bond volatility has moved up once again. This is putting pressure on the dispersion and correlation trade, which I noted last night in my kind of like infographic Twitter post. If you guys haven't seen that, you can check it out. I think the link to my Twitter is below. But basically, as bond volatility climbs, that makes index volatility also climb, which is kind of what we were talking about there with the forward return of VIX. And so that pressure pushes volatility out of equities and into the indexes, where and higher volatility environments tend to mean the indexes go down, and lower volatility environments tend to mean the equities go down. And so as that dispersion trade collapses, more and more participants are encouraged to go short equity and long volatility, right? And bond volatility is a significant driver of the opening and collapse of those trades. And bond volatility rocketed down very, very hard from the March peak on the back of the Fed backstop and the promise of security in the banking system. And we saw about 6 months of pretty steady decline that was offset with a few dips and scares in SPX. And those have, since the September Fed meeting, bond volatility has done nothing but climb. I think it's probably up like 37% today now. And it just keeps climbing. And the more that climbs, the more that's going to break down the dispersion trade between indexes and the underlying assets in those indexes. And that's something that we saw happen towards the end of 2021. This trade, began to break down as JPOW, thick pound. When JPOW announced that they were going to taper their bond buying, and then again more when they announced the rate increases in March of 2022. So taper in November of 21, rate increases in March of 22. And then progressively throughout the year, as rates were increased, bond volatility would pick up and dispersion would break down even more. And that continued really all the way into the low in October of 2022. From that point on, bond volatility kind of cooled. We went up through Jan and Feb. And then in March, obviously, bond volatility picked up a lot because of the bank failures. And then as that cooled, you know, dispersion picked up once again. And that persisted for about the last 6 months. Now that bond volatility is on the rise and it doesn't appear to be stopping due to the reflexive nature of the position that bond portfolios are in now, we will probably continue to see that dispersion trade break down over the coming months. Now, that doesn't mean that we can't have bounces, we can't have rallies. But we are shifting into a higher market volatility regime, and we're going to see, you know, probably reduced margin projections for equities. And I think that could last for some time, as long as the Fed is going to continue to maintain its higher for longer policy. And that could be easily into the middle of 2024, and with geopolitical conflict and stuff right now, maybe even further. So buckle up. Thank you guys so much. I hope everyone did well today, and I hope you all have a great night. I'll see you tomorrow for October OPEX. Have a good night, guys.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.